The Corona Crash, Surviving and Thriving in Market Madness. My name is Don Kaufman, and you are watching a TheoTrade presentation. A few formal items, a risk disclosure. We're not financial advisors nor broker-dealers. We'll explain here in a moment that I spent a very large portion of my career, of course, in the brokerage world. On top of it, this is a copyright disclaimer. This is ours. This is not yours. The other thing I always give you quick notice right up front. If you need to get a hold of us, okay, we're located in Scottsdale, Arizona. But the easiest way to get a hold of us and a hold of me after this evening, like I want you guys to know, like, yeah, you can email us right there, support@theotrade.com, support@theotrade.com. We use a common inbox. So effectively, you just put Don in the heading and I will get your email. Now, to jump directly into this, look, okay, this is why you are here. There's one thing that I will tell you time and again. If you ever come to any type of webcast or any video that I might record, I always want people to be able to walk away with something very definitive, okay? You took the time to be here, okay? And I want you to actually get something for your time. So the first thing is, okay, what the Corona Crash, what it looks like through the eyes of a 22-year market insider, okay? Parallels to recent market crashes in the past. And I'm going to talk about that. Obviously, I'm the 22-year market veteran. Number two over here, what lessons I've learned from past crashes. Actually, that one, I have to tell you. So I was putting this presentation together over the last couple of days. We're talking about what lessons I've learned from past crashes. Stuff was pouring out of me that I'm like, oh, this is the greatest thing ever, because it's literally helping me in the current environment. And you guys are going to see just that in a moment here. Number three, discover the typical order of how extreme volatility in market crashes play out. Number four, what works in extremely volatile markets so you can profit from that volatility. In fact, I'm going to show you a couple of those trades right up front. And number five, discover what can only amount to a massive opportunity that it's right in front of us. It's coming, okay? And I think to help you really regain some of the losses and profit like never before. And I know that this is a tough time, okay? This is undoubtedly a tough time, whether you're dealing with being, out of work, whether you're dealing with being, sequestered. I don't like to call it quarantine, sequestered to our own homes. Okay. Whether you're dealing with, financial losses. Okay. We're going to try to cover a huge spectrum tonight for many of you. Now, before I dive head on into it, our gift to you, for all of you that stay with me to the end of the webcast, we are going to provide to you a little gift. It's a $297 value. And I'll tell you what, if you've ever checked out this particular indicator, and I'm going to show it to you here momentarily, you'll realize where the value lies. This is a cumulative ticks and quad indicator. Cumulative ticks provide a running tabulation of the New York Stock Exchange tick. Okay, you can look this up. Again, there's sites that'll sell this thing for thousands of dollars. It's an NYSE tick indicator and can provide leading edge insight towards shift in market direction. Okay, this is in addition to what we actually call a quad indicator. And again, I just want to detail it because for anybody that is on tonight that stays until the end of the webcast, at the end of this webcast, I will provide you a link directly to this. Listen, we want you to stay tuned in the entire time, and we appreciate you staying tuned in the entire time. And that's precisely why we're going to provide this particular indicator to you. On top, by the way, this happens to be the futures contract, but this works for, well, any product in here. All right, what you have on top, this is the NYSE tick. This is actually the advanced decline line. Okay, we actually have on here, again, changing the advanced decline line, the market breadth. Okay, then in addition to it, and this is the big one down below, this is cumulative quantix. What it actually does is it continues to tabulate, okay, the tick, which is buys versus sells on the New York Stock Exchange, okay, and it actually gives you, again, a leading edge indication of turns if you will, in the marketplace. And one of the things that you can see actually up above, and I think that this is pretty insightful, this was actually a huge volatility day that I took this particular screenshot. I'm going to highlight it right here. Huge, huge volatility day, right? Happened to be on February 27th. The S&P started selling off and they bounced a little bit and then they started coming back off. By the way, this day did not turn out well. But if you looked at these ticks down below, they wavered. They did not really bounce numerically at all. And it was an indication, here comes sell side activity, and that's exactly what we saw. With that, stay tuned to the end. I'll give you the link to it. Next on the docket, little housekeeping item. Housekeeping. This is a skill set. You got to pay attention. All right. I'm going to fly through a lot tonight, and I really do mean that. This is the longest. Okay. This is the longest number of slides I think I've ever put together for a 1-hour presentation. So if I go over, will you forgive me? Okay. Shut the door, turn off Skype, chat, whatever other garbage is distracting you, close down Facebook. I mean, you got to be burned on all of this. Put your phones on silent mode. Kick the kids out. I mean, that's what tonight is about, right? You've spent enough time with them. Grandkids, if you have them, hopefully you're avoiding them at this point. And the dog, keep the dog. I like the dog. Anyway, took time to be here. This is important, okay? Focus on being here. All right, a little bit about me. I watched order flow for 15 years. That's why I'm here. So I'm actually going to give you a little bit of my background. I actually grew up around the trading business. I'm actually going to talk about that here momentarily because I'm going to tell you some stories of a few previous crashes that fortunately, unfortunately, I have been involved in. But I grew up around traders in the late 90s. I got started in Chicago. A short time after my career in the marketplace, I was in the market for about 2.5, 3 years. I got an invitation to come work for a startup company called Thinkorswim. I actually built the education division of Thinkorswim. There's a lot of features on Thinkorswim I also helped build over the years, actually a huge number of features we helped put together. Specifically, I am the options geek, okay? So I went on to help take Thinkorswim public in 2007, 2009. TD Ameritrade acquired us. I went on to run education for TD Ameritrade and, of course, their 7 million clients, but I had access to all of the order flow, which basically I could see everybody else's trades. And people always ask me what order flow is. We're going to talk about that tonight. Order flow is a big one, especially in this kind of volatility. I had access to everything that everybody ever did. Okay, at TD Ameritrade, Thinkorswim, which is the largest order flow out there. We study trades, we know what works and what does not, okay? What you learn here this evening, this one comes from watching billions of dollars in others' mistakes and the knowledge of what works best for retail traders. Here's also another fun tidbit about me. I studied molecular genetics for the better part of 5 years. Finished up with an honors degree in Townsville, Australia, specifically focusing in none other than virology. So, and even more specifically, scanning electron microscopy and freeze fracture microscopy. People say, how the hell did you end up trading? I always say, you know what? Electron microscopy. You want fries with that? I ended up trading because the formulas are actually very, very similar. And the mathematics are similar in trading as they were to genetics. So it's a little bit about my background. I've done a couple of tours on TV, still do this. This is TD Ameritrade TV. This is actually in studio back just a couple months ago. This is actually me on CNBC against the man himself, Mr. Wonderful. By the way, I was the short in Apple at this particular time. That's a little bit background on me. With that, let us get off and rolling. First, I like to show you what's possible in the extreme. Okay? When I say in the extreme, let's talk about what's possible. Now, I know that people tune into webcasts all the time and they're like, I turned $1,000 into 10 million. You got to get rid of all that crap. You really want to see what's possible, okay? From somebody that's traded for 22 years in this business. Okay, this is a 5-day net lick. 5-day net lick, 5-day net lick. This is what's possible. This is an IRA. This is my retirement account, okay? I don't make any qualms about, hey, this ain't heavy margin. There is no margin. It's a retirement account. This actually is 2 5-day net liquidating value periods because I figure this justifies and gives the best, okay, most distinct, okay, in terms of like what can you possibly do in a marketplace if you know what you're doing. If you look at this, these are dates, okay? These are actually the dates associated with this. Some of these run over weekends. It is what it is. 111, 225, 237, 238, 248. This was actually the big run, okay? This was a huge run. I'll actually show you the exact trades involved in this run. The next, okay, this is the most recent 5-day net liquidating value. For those of you that tune into our videos, I'm kind of flat. Now I'm sitting, there's big opportunities coming, people. Anyway, I was 305, I was 305, I was 305, I was 305. There was a weekend in here, okay, and then I jumped today to about 308 in terms of net lick. So you want to know what's possible, okay? You could turn about a $200,000 account to about a $300,000 account inside of a window. Again, you can see that's precisely 1 month. It's precisely 1 month. And I'm not going to tell you that that's possible all the time. That's possible in this. That's possible in the extreme. And that is not just possible to the downside. And I'm going to make that very, very clear. All right. When I tell you what's possible into the extreme, let me actually show you some of the types of trades that we're doing right now. Okay. So these are trades that are taken specifically from my account, okay? And by the way, if you were unfamiliar with the previous slide, this is actually a screenshot taken from the Thinkorswim trading application. So this is, again, it's a 5-day net liquidating value. This is also a screenshot from the Thinkorswim trading application. This is the date and time of the trade, okay? This is the debit paid and the credit, the debit, the credit. Now, this is a QQQ in-out spread. Okay, well, this one is back when. I said I wanted to show you what I did in terms of the big run. The big run is when, I turned about $70,000 inside of about 2 to 3 weeks. In the big run, we used some in-out spreads, okay? In this trade, this is just a spread. For every $80 I invested, I got back $139. It's a 74% return. By the way, you don't have to do $80 invested. I do that so that you guys understand you can do this in a $200 account, a $2,000 account. I don't care, right? This could be $800, okay, to $1,390. It's the same animal, right? Just adding a couple of zeros. That's one of the first trades. Oh, another trade in here. This is actually a JP Morgan in-out spread. Okay, so this one also the same kind of time frame. As I said, I wanted to show you initially, okay, where we had what we term kind of the big run. In this case, every $81 invested got back $159. It's a 96% return. Again, the opening date, February 6th, the closing date, February 25th. You can see the exact times of execution in here. Next on the docket, I know what everybody's thinking. I would like to see something more recent. Is this recent enough for you? So this next trade happened to be none other than Costco. Now, for those of you, if you've never traded an option before, okay, and please, you're in the chat room right now. Hey, have you ever traded an option? Or you're watching this, okay, somehow, and okay, you can just talk to your screen. Come on, we're all trapped in our homes. Talk to your screen. Everybody's doing it. Listen, I'm trapped. I got a wife and 3 kids downstairs. Okay, there's no getting around it. Not like I'm in an office. So with that, talk to the screen. Okay, or you can feel free to type into me. You ever traded an option? Because what I'm showing you right now, they are option spreads. And the reason I use these option spreads, because I want you to know something important. And I'm not gonna spend a long time talking about the option side of things tonight. But listen, you see this? Okay, it's $110 invested. That's the maximum I can lose. Okay, what's the most I can make? Well, on this spread, I could make as much as $250, but I didn't make $250. Okay, I made $177. Okay, so that's it. All right, and some people I've never traded an option before. All I want you to do, if you've never traded an option before, what I want you to do, broad strokes of logic. You see what the risk is. Okay, you think I'm not somebody that wants to take a lot of risk, especially with my IRA account. I don't want to take a lot of risk. So you just saw $100,000 of P&L, and you're like, how does something? I don't take a lot of risk. Okay, a lot of these trades in here, this is onesie twosie stuff. Like, do I have $110 at risk? No. Okay. In this one, I did a few contracts, but again, you can come in here and do $1,100 at risk to be able to make $1,700, okay, and 70. That's okay. That's all fair game. You don't have to risk that much though. But I want you to realize that's it in terms of risk is $110. Why do I bring that to your attention right now? By the way, I also want to bring this up because this is Costco, okay? And I put on, and this is a put spread. Just want to show you this. That's a bearish trade. This is a bearish trade. People go, are you crazy? You've been bearish on Costco? That's like one of the few stocks that's actually gone up. Hey, sooner or later, okay, this was my logic on here, and I love to talk about that one, but my logic on here was a very simple one, okay? We're not going to need this much toilet paper, people. We're just not going to need this much. I don't know who you are, where you are. You're building castles out of toilet paper. You're not going to need that much. By the way, when I say that this is a recent trade, okay, is that recent enough for you? I mean, I closed it today. It's 61% return. I also want to show you another trade. You know what this trade is here too? This one's also in Costco. Because again, it gave me just a golden opportunity. So I put it on, again, the same trade, okay, or a similar trade, I should say, and I closed it today. And this one's a little different. For every $211 I invested, I got back $335. This one is none other than a 59% return, okay? These are the types of trades. Now, all right, what else I got? I've got Amazon. Take a look at the Amazon trade. This is one that I have to tell you, I've been doing this for 22 years. I have never, had a spread make money faster than this one. In Amazon, I actually put on a bearish trade. This is a bearish trade for $225. Okay, every $225 I invested, I got back $307. It's a 36% return. That happened. Here you go. I opened it at 7 in the morning. I closed it by just before the close, which is about 1 in the afternoon. So a whopping, 5-6 hour trade. That's it. We're out. We're out of the contest. Okay. Next one on the docket over here is none other than Microsoft. By the way, when I say that all these are recent trades, look at the dates. Okay. I mean, this March has felt like it has been the longest year of my life, but March has been a long month. Here's one in Microsoft, very similar. I put it on the 19th, extracted this one, closed it, I should say, on the 20th. Every $211 I invested, I got back $301. It's a 43% return on this. And again, this is all part of the run. All right. And when I say the run, this is what actually produced, in-out spreads. And I'm going to show you also the heavy hitters here momentarily. Before I do so, what our members are saying. Okay. Harry Leonard closed Microsoft for a 302 for a 42% gain. By the way, that's actually referencing this trade. Okay. I just wanted to show you that because look at the date specifically on here. If you look at some of the dates, I wanted to pull stuff. This is actually from TheoTrade and our chat room. Okay. Ian over here managed to exit the Amazon in-out Friday at a 30% gain. Okay, that was the Amazon trade I just showed you a second ago. Okay, and here's this one is Larry on the bottom here. Closed the Microsoft on March 19th for 365. He actually held it longer than most of us happen to. So again, this is I just wanted to indicate these are not trades that I did. This is actually trades that I did in live. Meaning that I'm trade with the TheoTrade clientele. Next in the docket, these are actually the volatility trade examples. So again, I wanted to start with this. What's possible in the extreme? First of all, this trade, I make no qualms about it. This was actually opened January 14th. It was actually closed February 27th. For every $180 invested, I got back $1,053. It's not a mistake. It's 485% return. This is actually a risk twist spread. This is the mother of all kind of ratio back spread type strategies. The risk twist is a monstrous power tool. Remember something on this particular trade. Okay, your risk is quite limiting to have returns like that. And again, this doesn't have to be $180. It could be $1,800 to return $10,000. Okay, 530. That's the kind of home run you can actually hit with the strategy. So that's a SPY risk twist spread. It is strategies like this that, again, look at the date specifically on here, and you notice that I went on a $50,000 run in a 5-day period. This is one of the strategies that helped do it. Okay, here's the other one. This one happens to be the exact same strategy presented to you in the XLF. This is actually put on, okay, December 20th. Now, for those of you that are tuning in right now, have you ever watched any of the videos that we've ever done in the past? Maybe some of you guys are brand new. You've never watched a single video that I've ever done here at TheoTrade. I've been talking about risk twist spreads. They don't pay off that often. They don't pay off that often. Who cares? Who cares? What did I have on here? I had $36 invested, and I got back $135. Not exactly like, the Grand Slam home run, but it's still a 275% return. But in this particular trade, make it easier on yourself, okay? This one could be, $360 invested, or, $3,600 invested. $3,600 invested returns what? It's huge. $13,000, okay, $500. That's, again, just dependent upon the number of contracts. And this is for some people that are brand new, to options specifically. This is the kind of stuff I wanted to show you. All right, moving on. As I said, when I went on the run, this is the XHB. For those of you that don't know what the XHB is, okay, it's home builders. Home builders. I can't write with this thing. There you go. In the home builders, I put this on, February 21st, closed it February 28th, 53 cent debit, okay, 362 credit. Every $53 I invested, I got back $362 at 583% return, okay? Again, all I'm showing you and I'm starting with is what's possible to the downside. You ain't seen nothing yet, okay? Because right now, these aren't even the opportunity. That's where we're headed, okay? A couple other ones on here. The next one I want to show you, this is an interesting strategy. This is called the VIX volatility spread. The VIX volatility spread went off huge, people. This trade, January 17th, it was also closed. Again, you see me getting out of a lot of positions on February 27th. I paid nothing for this trade up front, closed it for a 375 credit. All of these trades were done in front of a live audience. Okay, now I'm going to show you the final in terms of the live volatility trades. This is the how shall I say this? The mother of all returns. Okay, you got it, people, right here, live and uncut. That one was actually put on when we started to move already. All right, this is the XLU, which is the utilities. This is a utility risk twist spread. This is a product that nobody ever thought would move. We put this one on February 7th, okay, and paid $96 for it. That's not a mistake. That's 96 cents. It was a 96-cent debit right there. Every 96 cents, okay, got back what? $12.72, or a $1,272 return. It's a 1,225% return on there. This is one that definitely moved the account. Why? You could have done $960 worth of this, which returned, okay? Again, if you did $960 worth of this, returned what? Oh, just add a couple of zeros in here. It's $12,000. $960 turned into over $12,000 on that risk twist spread. And again, so you guys know, that one, come on, I was late to the party in there. I was late to the party and was actually put on as the market was already in its phase of descent. Again, what our members are saying over here, and I wanted to show you this because these are traders that have had the exact same spreads on. This is Rich. Good morning, all. Without knowledge gained from Don and his team, I never would have survived trading in an environment like this. Okay. And by the way, this particular tidbit, I took it right out of our chat room here on March 18th. I haven't made the obscene profits like Bill, by the way, so I decided to put Bill down below. Okay, but nearly all my trades in the 2+ weeks have made 20% to 55%, just like playing the spiders. One spider trade hit just over 200%. I have a couple of SPY puts that carried over from yesterday that did quite well. Biggest loser was 14%. By the way, this is Bill. Bill actually trades a couple of futures against his position. Got back from Hawaii last night. Futures trading from the beach. Paid for the entire trip. Okay. Maybe he quarantined himself after this, and that's happens to be Bill on March 16th and March 18th. He said, "I've made obscene profits. Okay, I cannot trade for the rest of the year." He's being a little facetious in there. Nevertheless, let's get into it. Trading through the extreme. So all I wanted to do is fire off. In the first 10 minutes, I wanted to fire off just a couple of quick trades to you to show you what is possible in the midst of the extreme. You got to understand one thing. Okay, so many people think this was it, baby. The move to the downside wasn't it. Okay, and moreover, the move to the downside may not necessarily be over. Okay, what we have to learn are, and again, I stress this so much. What we have to learn are some lessons from the past volatility and some of the crashes, right? And I figured, who better to quote right now than Yoda, the greatest teacher. Failure is. I just listen. I've been locked up for a lot of days, by myself over here, to a degree, putting this together. But I figured one of the best ways that I can actually help you. You're quarantined at home. I should call it sequestered at home, right? What can we do right now? I am telling you, okay. Listen very carefully to what I am about to say, because this is the stuff. As I was actually putting these slides together. I can't stress to you enough, this is what's going to be the defining factor of your success and or failure. What you have to understand about what we're in right now, okay? Whatever it is, and I don't know when it's going to be over, and if anybody tells you that they do, get the hell out of there right now. And I really mean that. Nobody knows anything about how this is about to play to the future. All we can do, okay, is, and you're going to see this here momentarily, we're actually going to have some very large points to make from previous crashes, okay? If you know how to structure trades properly, you know how to mitigate, which is control risk, you're going to be fine. And you got to realize this is the opportunity. I thought to myself, and this is recently, and I'm going to tell you a couple of stories here momentarily, okay? First of all, you don't suffer in this. You got to prosper, okay? Most suffer, and this is just true, most suffer horrifically through intense bouts of volatility. And by the way, I'm not just saying that. I want you guys to understand something about this. I'm not just saying that, this is not like a fear-mongering. Most suffer through horrific volatility. People, I worked, okay, at the largest retail order flow brokerage firm for 15 years. You think I don't know what people suffer through? Okay, I'm going to tell you a couple of stories about it in just a moment. Experience prospers in this, okay? I'm telling you right now, people live for these rare opportunities. They live for it. And then we quoted Spock over here. But the point of that is, I was thinking about this, and it was a couple of months ago, I was thinking about it just randomly. I was actually talking to a gentleman and was telling him, I had bought a house back in the middle of the financial crisis and so forth. Was the greatest purchase of all time. I bought a couple stocks back in the middle of the financial crisis, and I remember thinking to myself, I go, that will never happen again. I mean, that was like a once in a lifetime, okay? I just knocked the cover off the ball on the buy side of stuff, okay? And I'm going to talk to you guys a little bit about some of those stories tonight, because once in a lifetime, here we go. I'm going to give you some volatility war stories. Although some of them are a little anecdotal, specifically to me, each one of them is going to have a massive, takeaway in it. And I want you guys to be able to use this stuff. So a couple of these volatility war stories, and it's Peter Griffin. That's what I typically look like. I don't sleep a lot during periods of time like this. Okay. Not only do we have a million emails and so forth from our clientele here at TheoTrade, but moreover, I like to watch the futures overnight. Like I'll literally watch the futures. I'll wake up in the middle of the night. I'll even trade sometimes in the middle of the night. Okay. Because I realize, listen, I'm locked at home just like you. This is it, people. This is what we trained for. And that's what people don't get. This is what you live for. Okay. I was born into a volatility trading family. Little background about me. My uncle was a market maker in the early 1970s. He was a talented individual. He's a mathematician. There was two individuals that sought him out because he was making a little bit of money on the trading floor. They sought him out and they said, "Hey, kid, you know what you're doing. This is actually my uncle. And they said, you know what you're doing. Come work for us. Yeah, okay. So he was a risk manager for a period of a few months for two very, very famous traders at the Chicago Mercantile Exchange and Chicago Board Options Exchange. In fact, they helped found the Chicago Board Options Exchange. Short time after he worked for him, they gave him $300 million of startup capital. And the only rule with the $300 million, by the way, this is $300 million, just so we're all clear, this is 1975. $300 million. Nobody had that kind of money. These guys did. They said the only thing we care about, name the firm after us. Okay? That firm was called O'Connor and Associates. He built the firm from 75 to 1983 to over 500 seats in exchanges around the world. I literally grew up around trading, okay, and always learned that volatility, this is the place. This is it for me, okay? Volatility is always where we made our money. In fact, I was actually with my uncle's family during the mini crash of 1989. That was the first time I remember being exposed to it, but I was a kid. Listen, you know, I'm 44 years old this week. I'm going to be 44 years old this week. So I was only born, obviously, in 76. I'm a bicentennial baby. And when I say I grew up around, volatility and trading, that's how I ended up in Chicago. What I've always learned, thrive in chaos. It's my house. That is my house. I thrive in volatility. Let's get to it. You guys prepared to learn a couple of volatility lessons from the past. I'm going to tell you a couple of war stories in here. Okay. Before we go any further, block out the crap, block out the noise. And I mean this right now. You want to survive this. Do you want to survive? Okay. Volatility. Forget about thriving in it for a second. Forget about the opportunities. You want to survive this? Block out the crap, block out the noise. Why do I say that? What do I mean by noise? If you are trading and you have CNBC on in the background, you're doing it all wrong. If you are trading and you have some, CNN money or, Fox, whatever, it doesn't matter. Turn out crap and noise. Why do I actually throw a picture of Janet Yellen up here? This, okay, I think you would have to agree, is probably a smarter individual than almost anybody on CNBC, right? Maybe, could be. Yeah. By the way, this is a quote taken from Janet Yellen. I don't see a financial crisis occurring in our lifetimes. Oh, take a look at the date right there. That's June 27th, 2017. Bye-bye. Bye-bye, Janet, because block out the noise, all right? Well, you're being fed lines of crap constantly. I'm going to tell you a quick story here. I don't do CNBC, okay, but a handful of times because I'm sick of the producer in my ear telling me what to say. The next time you turn on CNBC, you think about that for a second, whatever channel it is. I cannot stress this enough. This is supposed to be one of the smartest people. It's Janet Yellen, right? That's previous to what we just had, okay? What do we have right now? We got ourselves a Jerome Powell, but I just wanted to show you that, okay? Janet, you're right. We don't have a financial crisis, but we're about to. Didn't start with a financial crisis, but sooner or later, any economic crisis turns into a financial crisis. But don't worry, okay? Your predecessor is there. Save me, Jerome. Okay? It's insane. Next on the docket. No crisis is ever the same. I don't want to hear this crap. This is just like 1929. Okay? This was like 1933. Everybody talked about today. Did you guys know today the Dow moved up on a percentage basis, okay, the most since 1933. I hear all this crap and I'm like, listen, no crisis is ever the same. You're going to learn that. You need to take specific lessons from each crisis and apply those experiences, okay, to your forward path. That's all you can do. And history will repeat itself, okay? Yeah, but it's never quite the same, is it? All right? You're like, wait a second. I have seen this movie before. You're like, how does it end? Okay, it ends with me running into a wall. Well, you can fix that. Why? Okay, because we actually have to interpret things a little bit different. Never interpret any two meltdowns the same. It's an epic mistake. Like, oh yeah, I've seen this one before. Listen, here are a few war stories and lessons learned. Okay, and I love to use that phrase, like, everybody's watching the same movie and so forth. You're going to hear that here in just a moment. So let me actually take you through a couple of war stories and a couple lessons learned to kind of give you a little bit of a path forward here. You guys ready? First one, 1998. All right. Yes, it's Forrest Gump in here. 1998. It's a long-term capital management debacle. For those of you who have no idea what I'm talking about, okay? In 1998, well, I only started trading in Chicago, and in 1998, specifically right around this time frame, they actually had me training, okay, in and on the trading floor. I originally traded in Yahoo. I only went down there to train because I realized I'm 5'8", about 185 pounds. The trading floor was not a great environment for me. Trading in the late 90s was more like a sport than it was a financial product. Okay, I only got down in Chicago the summer of 98. That was my first couple of weeks trading, and the long-term capital management debacle broke out. Now, I'm actually going to give you some of the huge tidbits and takeaways, and then I'm actually going to show you a little bit specifically about this and what I was actually doing at this particular time. So the first takeaway from the long-term capital management debacle, and again, this was a hedge fund. Okay, in the 90s, and this hedge fund was actually run. First of all, there were 2 Nobel Prize winners. Okay, one of them, came up with the Black-Scholes model. Okay, actually 2 of them worked on the Black-Scholes model, and they also had some of the biggest heavy hitters out there, pretty much in the entire finance world. Okay, they put together this fund. The fund was absolutely spectacular until it derailed itself, losing hundreds of millions of dollars in one day in August, and it just bled out from there, and it was hideous. In the end, what happened with long-term capital management? Okay, the Fed had to step in. If the Fed had not stepped in, it could have possibly seized the entire marketplace. It would have actually. The market would not have opened on a Monday morning, and the entire financial system could have collapsed. That's from one hedge fund. Okay, in 1998. Our takeaways from this: correlations are high in a meltdown. No asset classes are immune. What that basically means, if we tank, everybody tanks. There's no place to hide. Are you aware of that now? It's a great takeaway, isn't it? Why? Because that's applicable to what we're seeing right now. Ain't no place to hide. It actually describes why certain products that you have, you're like, I thought I was immune. My fund manager correlations are higher in a meltdown. That's applicable to right now. Number 2 point over here, the Fed is willing and able to go the distance in stepping in to save the financial world from collapse. This is the first time, This is the first time that they actually saved the entire financial system from just abject failure in this particular instance from one firm. Number 3 over here, smart people can do some extraordinarily stupid things. That's why I put the Forrest Gump over here. Stupid is as stupid does. Now, my takeaways from this. You got to understand, at the time, I was 22 years old. I'm standing on the floor of the Chicago Board Options Exchange, trading in Yahoo. Now, when I first was trading in Yahoo, this was a period of time when the marketplace was exploding to the upside. I started trading, in this time frame right here. Some of my first days of trade, I actually walked in graduation right here and got to Chicago right there. This is my background. There's graduation. Here's actually trading. There's about 3 weeks in between. Market was rallying. I'm actually trading in Yahoo, just really training. The marketplace started to slip to the downside. In a particularly hideous trading day in early August, they moved me upstairs, and they moved me upstairs to hedge. So I became a portfolio manager, all right, and had absolutely no clue what I was doing other than I was to hedge a particular portfolio at the speed at which the trades were coming in. This right here, that was my 3rd week as a portfolio manager. Nothing like trial by fire. We actually moved from roughly 1,100 on the S&Ps, to about 950 on a percentage basis. These were monstrous moves. We bounced, we faded, we bounced huge over here. That was my trial by fire. Now, I wish I could tell you that this was going to be a wild and long story over here. But when I first traded down there, we had at the time about $70 million that we were managing. And that $70 million, that was not my capital. I was 22 years old at the time. Okay, that was actually my direct superior's capital. So a gentleman I actually worked for was he was the proud owner of the $70 million of capital. We actually worked as a very small unit on the floor of the Chicago Board Options Exchange. Again, trial by fire, and this actually worked out. It worked out quite well for us. So there was another interesting takeaway from this at the time, and I never thought much of it until, looking back on it now. Okay. Basically, the first few weeks of me trading, I was actually trading in a 45 VIX, and we were selling huge amounts of option premium up here in a 45 volatility. Nothing like, again, being thrown. And I tell people this, I was born into volatility. Okay, that's all I knew because that's what I initially traded in. So that was in 1998, and things, it kind of died down a little bit from that point. But again, look at some of the key takeaways in here, and you'll understand a little bit better. Correlations were super high. Again, you learned that nothing was immune, right? The Fed willing to step in, save the world. And this is actually a big one. It sounds ridiculous, but smart people doing very, very stupid things. Don't you worry. That one's going to come up here momentarily again. Okay. All right. Next in the docket. This is actually where things started to get much more interesting for me. So for me personally, okay, in this time frame between 2000 and 2002, this is the internet bubble burst. Okay. Before I get some of the points on here, I actually transitioned in the middle of this market meltdown. I transitioned into trading my own capital. So that's why this is where the takeaways start to get really good. So I started trading my own capital, and for the first time in my life, by the way, the first time in my life I started executing my own trades was in 2001. I make no qualms about that. Before that, I literally traded, hundreds of millions of dollars in terms of notional value every single day. Up until the point of 2001, I traded hundreds of millions of dollars of capital through my accounts every single day, but I was working for a trading firm. At this point, in 2001, I actually transitioned to trading my own capital. First rule I actually learned right here is, holy crap, did I trade big. I didn't know any better, okay? Come on, at this point in time, I was about 23 years old. I got through Y2K, okay? I lived through it. I was, living at the time between Chicago and Scottsdale, and I'm not joking when I say this. I was actually working with an individual that had a private jet. It ain't bad for a 20-something-year-old kid literally getting on a private jet almost, on a weekly basis to go between Scottsdale and Chicago. Not my airplane, but again, not a half bad way to fly. What changed for me is in 2001, I got an offer into a startup of Thinkorswim. And that's actually how I met the gentleman with the private jet, because he was some of the financing behind Thinkorswim, and he had a place out in Scottsdale, Arizona. By the way, the same gentleman actually owns part of a football team right now and did very well in owning a portion of Thinkorswim. So a couple of takeaways from here, and then I'm actually going to tell you a personal story on this one. Okay, one of the first things you learned from the internet bubble, ridiculous mergers and IPOs are red flags. By the way, think about that for just a second. Okay, we're in an absolute hideous debacle. Do you see anything, that stands out? Ridiculous mergers and IPOs. Okay, one of the ones that stands out to me, Occidental. Okay, if you have no idea what I'm talking about, don't even worry about it. Oh, yeah, Oxy. Oxy is basically almost out of business right now. Why? They bit off a little bit more than they could chew. All right. What other red flags were there? Oh, some of the IPOs that have come out recently. What are you going to do? Well, my plan is to raise money through an IPO. I'm going to lose more money faster than the other guy, but we're going to build. Okay. And if we keep building the company and losing more money, eventually we might actually turn the corner and make money. What company am I talking about? Which one do you want to pick? Do you want to pick Uber? Do you want to pick Lyft? Okay, you're like, no, man, those are going to be great. Really? Look how they're performing right now. Again, there are direct correlations behind the internet bubble and what you're seeing right now. I just wanted to throw that out there, but ridiculous mergers, a couple of IPOs, you think those are not red flags? Okay, nobody saw a red flag. Like, there's no coronavirus. It didn't make a difference. There's still red flags. All we needed was a little bit of a match thrown into what is amounting to kerosene, okay? And that's exactly what you have right now. If it wasn't going to be the coronavirus, believe me, it was going to be something else. Okay? The coronavirus is just like, holy crap, it's the perfect storm, right? But the reality is, this crap was going to happen regardless. You had all the makings of it. All right? The next point to be made over here, this one is absolutely critical because point number 2 over here, this one carried through to the financial crisis. That one carried me into the financial crisis and carried me through the financial crisis in 2008. Bottoms in markets are not made at highs in volatility. I'm going to remind you of that soon. Market bottoms, okay, are not big spikes up in volatility. They're usually very different. Okay, different time frames, meaning that right now we just saw a huge spike in volatility the last couple of weeks. You realize that? Huge spike in volatility. But at the exact same time, okay, that doesn't mean crap. It doesn't mean it's going to be a market bottom, okay? Because what happened when the internet bubble burst? The volatility spiked. And the volatility was actually going down and the market kept sinking. 2 years people had to watch this crap go on, okay? All right, number 3 point over here. Order flow is totally transparent. Everyone is doing the same thing, watching the same movie at exactly the same time. I told you that phrase would actually come up. Okay, in this particular crash, in the internet bubble, when it burst, this is the first time that I actually got to watch from behind the scenes. Okay, I was not on the Chicago Board Options Exchange floor. I was not behind a computer screen at the Chicago Board Options Exchange. I was behind a computer screen, okay, of Thinkorswim, and we had some, okay, of the largest order flow in the entire world at the time. We only opened the doors in 2001. By 2002, everybody that was anybody traded, okay, with Thinkorswim. If you had money, if you knew what was going on in this industry, I'm telling you, you traded on Thinkorswim in 2002, okay? And we got to see what everybody else was doing. And it's the first time that any traders, okay? And when I talk about like early Thinkorswim days, and I love to tell stories about like early Thinkorswim, but here's a story that most people don't know, okay? It was the first time that real traders ever launched a brokerage firm and sat there and watched people from behind the screen. We watched people entering orders and we're like, holy crap. Everybody's panicking they're all panicking at the same time. This crap is priceless. It was worth more to us than the damn brokerage firm at the time because we were trading and we were watching everybody panicking. We're like, this has to be the bottom. This is it, baby. Okay. Bottom's got to be in. Okay. And we've also learned in this, it's a long road. Okay. That crashes are not, okay, typically what? One and done, which right now, better keep that one in mind. We've been down 30%. Okay, in what? Basically, we've been through 3 weeks. Well, we're really into the 4th or 5th week of this now, but it's been 3 hard weeks. It's a long road, okay, either to the recovery or all the way down. Think about these. By the way, little story here to actually give you in terms of the SPX. This is the S&Ps during the entire collapse of the internet bubble. Right in the neighborhood here, for those of you that do know a little bit about this, okay, some of the peaks were right there. This is actually the March. Again, that is March of roughly 2000. When I say it was a slow and painful grind down, I am not kidding. I just want to highlight a point, okay, that the absolute lows of the marketplace, okay, were here. All right, in terms of time frame, we're looking at 2001, and the marketplace started to rally back up in 2002, 2003. Nevertheless, you can see some of the absolute lows in this marketplace. And you know what? I thought I had the VIX in here. The VIX at the same time, and I apologize now for having the slide. Okay, the VIX was already spiked. Okay, the VIX had spiked way before that. So the key takeaways we learned from this. Market bottoms are not made, with the highs in volatility. It was a pretty interesting, aspect. Now, some of my own trades at the exact same time. Most of my trading was actually done here in the SPX. In the SPX, what exactly did we do? Volatility was running high the entire time, okay? This slow, painful grind to the downside was actually some of the best options trading in the history of this entire marketplace. Option premiums were running sky high, and they were running sky high for a period, okay, of approximately 2.5 years. You were seeing volatility, okay, in the 30s, 40s, okay, consistently, day in and day out. Like, people, you have to realize, I started in the business in 98. I see huge volatility in 98 by all the way from 2000, 2001, 2002, okay? It was raining money. It was absolutely raining money because the volatility was so high. Now, that happened to be predominantly on the way down, but because it was a slow and prolonged move to the downside, that volatility was sustained, okay? The up move over here is equally as impressive, all right? The opportunity is boundless in here. All right. Next on the docket, this is the financial crisis. The financial crisis, this is actually where I will tell you hands down, okay? I made lifetime fortune inside of the 2008 financial crisis. That is not a popular topic of conversation. Nevertheless, it was in 2008 where, here, point number one, warning signs of the financial crisis were everywhere. Okay, nothing, I'm going to say this as eloquently as I possibly can, and please excuse the language. Nothing pisses me off more than when I watch some crappy documentary or a movie that portrays, 10 or 15 people in the freaking world that knew that the financial crisis was coming. What are you talking about? Did you not see a company called Bear Stearns go up in flames in January of 2008? Huh? Oh, that firm was around for hundreds of years, okay? I want you to remember this. It was January of 2008 when Bear Stearns went up in flames. And people, I had no idea, okay? One of the biggest financial institutions ever goes up in flames, okay? You just had to have your eyes open. As soon as they went up in flames, do you know what happened? Let's actually repeat what we learned a little bit earlier. What have we learned so far? Okay? The Fed's willing to do anything. You want to see a warning sign? Bear Stearns went up. Oh, did that not catch your attention? You're like, no, I didn't know what a Bear Stearns was. Okay. Were you aware that the Fed was around in 2008? Were you aware right after Bear Stearns went up in flames, the Fed actually came out and cut interest rates during market hours? Okay, and tried to save the financial world, and the marketplace sold off after that. Okay, and then they calmed everything down by saying, it's okay, Ben Bernanke, and it's okay. They were throwing smoke signals to you, okay, and then they were patting you on the head and telling you it's okay. Warning signs are everywhere. If you listen to this crap that, there's 10 people in a room and they're financial wizards, okay, yes, I have been in the business by 2008 for 10 years, okay? The smoke signals were everywhere, right? Coming into the financial crisis, locked and loaded, just locked and loaded. It was ready to go, right? But I'm actually not going to tell you about the down move in the financial crisis. I'm not going to tell you about the down move. I made good money in October of 2008. I actually closed almost all my positions in October of 2008, and that was not the bottom. I didn't catch the bottom, okay? But what I'm going to tell you actually about over here is really when we were on the brink. And the second point over here, we will come back from the brink of abject failure and near complete collapse. No matter what you might think, this world could be vastly different 6, 8 months from now, a year from now. This world right now could be vastly different than it is financially than you're sitting in right now. You're going to have a fun story here. People will still drink coffee. Okay, people are still going to drink coffee, right, after all this crap happens, and you'll understand that comment in a second. The third part of this is opportunities are boundless. Listen, during the financial crisis, jobs were getting whacked left and right. I was in the financial industry. I was actually running, okay, a large portion of a brokerage firm at the ripe old age of 30 years old when the financial crisis is going on. Jobs are getting lost. Homes are getting lost. It was brutal, okay? Those seeing, okay, past all that turmoil and crap, you just rose from the ashes. Just a lifetime in fortunes were made. I'm actually going to show you a little bit of my trade. But my trade, again, I'm not actually showing you the down move. I'm actually going to show you the up move. Okay, quick story over here for us. So I saw the financial crisis coming, and I did profit and profit quite significantly to the downside, but nothing in the financial crisis, okay, mirrored what I actually made to the upside. Nothing. Okay, this is monstrous trades. Okay, this is actually a company that most of you are probably familiar with, Starbucks. So if you ever heard the Starbucks story from me, great, because you're going to hear it again. So kind of fun little story. So I was actually living at the time of the financial crisis between Scottsdale and Chicago. I had a place in both. I had a house out in Scottsdale, and I had an apartment in Chicago. So I was traveling around at the time quite considerably. I was actually opening up an office in Singapore for Thinkorswim at the time, so I was spending some time over in Asia. Anyway, this particular kind of week, I was back in Scottsdale, and I'm going to show you the exact week I was back in Scottsdale because it was right there. So I'm back in Scottsdale, and it's the middle of the financial crisis, and people, it's bad. It's one of the worst trading sessions that I've ever seen. The S&Ps in this particular day, and I know this is Starbucks, but the S&Ps this day moved 10% to the downside. Okay, the only thing to compare it to is what we just went through the last couple of days. All right, Starbucks is just tanking. It's tanking. And here I am. I'm standing in a line, for those of you that are from Scottsdale, and it was in Kierland. I was actually standing in a line for about 20 minutes waiting to get, and again, I'm like 30 years old and I'm excited about my coffee, right? I'm like 30 years old waiting for about 20 minutes to get a freaking cup of coffee. And I was actually testing the very first version of Thinkorswim Mobile on a BlackBerry, I think it was a BlackBerry Pearl. And at this particular time, to test Thinkorswim Mobile, I'm standing in line for Starbucks going, this is freaking ridiculous. The financial world is coming apart at the seams. And these idiots, and I'm actually, by the way, I was yapping it out loud too. I didn't even care. These idiots are making me wait for my freaking coffee. I just need some goddamn coffee, and I want to go back, and I want to go back to my place because I'm losing. By the way, this was a day that I was losing it because I was worried about Thinkorswim. I mean, that's how big the move was. I was making money personally, but I was worried about the brokerage firm because we had moved 10% to the downside. And it dawned on me while I was in line, and I said, myself, I go, that's it. I started actually buying stock right here inside of Starbucks. I started selling puts. Okay, and I started selling puts, and I started selling puts, and started selling puts. By the way, I started getting in at the right here. Okay, and this is actually split adjusted, but about 5.5. And by the time we were actually down below over here, okay, down below over here, I was the equivalency of 28,000 shares of Starbucks. It was all getting put to me. In fact, this is a kind of a not so fun story, but on this particular day right here, okay, I actually had one of the largest single day margin calls in the history of Thinkorswim. I held a record. I held a record for about a year and a half at Thinkorswim. I had one of the largest margin calls ever, and I was able to meet it. Okay, I was able to meet it, but the market also bounced back up the preceding 2 days. The reason I tell you this story is I just sat in the line, and I'm like 20 minutes to wait for a cup of coffee. The world is coming to an end. People are still buying Starbucks. We're going to be okay. It's more of a fundamental basis story. And the reason I wanted you to realize it is right now, okay, the world outside is completely shut down. The Starbucks are even shut down over there. But I'm telling you, things are going to return. And when they do, okay, the upside opportunities in here are going to be absolutely boundless. 28,000 shares over here. And I'm not going to sugarcoat this. Man, I had to take some heat like you have never believed before. My average price, okay, into Starbucks was right in the neighborhood here of about $5. The thing traded all the way down almost to the 350 level, only for a couple of days. Nevertheless, I don't care who you are and where you are. Let's see you sustain 28,000 shares, okay, with a stock at about $5 that's trading even below 4. You're like, okay, so you're down 28 grand. Yeah, at one point I was down about $65,000 in a couple of trading sessions, all right, just on a few puts, a couple of shares over here. By the time it was all said and done, and I give you the whole lowdown, this was the absolute low. Okay, Starbucks obviously rebounded quite considerably. Listen, the story ended extraordinarily well. Nevertheless, I don't want to give you anything that isn't dead on. Okay, most of my stock was actually sold in this neighborhood here. And I love telling that story because do you think I had any idea that Starbucks, okay, and 28,000 shares, okay, was headed back up to 100? This was a spectacular return on the types of trades I had on. I had stock, okay, I had back spreads to the upside, huge risk on, just huge risk at the time, okay, and the rebound, although it took time, was absolutely monumental. And it's one of the huge takeaways from there. But this one it wasn't the only trade I had on. It was one of the bigger trades I had on, but it was an absolute layup looking back on it. And that's the point that so many people are missing right now, okay, about what we're in. So let's actually come to the present. This is 2020, okay? I have no idea when it's going to end. Okay, this is what we call the everything bubble. I know people are calling it the Corona crash. I completely disagree. This is the everything bubble. Markets, okay, can largely ignore the Fed. It's the first takeaway that we're actually learning right here. Markets can largely ignore the Fed. Do you realize what the Fed has done so far? Okay, what the Fed, okay, is doing right now? The Fed, they can't fix everything. They just cannot fix everything. The markets can turn their back on the Fed. That is a scary thought. That's the first takeaway from what we're in right now. Number two, companies bought back stocks at all-time highs. Now remember, this is the exact same takeaway as you had previous. Smart people, this is from 1998, can do some extraordinarily stupid things. Who am I talking about over there? Everybody. Now I can sit here and point fingers, okay, and I will for a moment, okay, but everybody's buying back stock at all-time highs. What? All of them right now are cutting back all their stock buybacks. They're cutting dividends. They're cutting everything right now. We just went from the largest stock buybacks in history at all-time highs to no dividends, no stock buybacks, okay? Do you understand the stupidity behind this? Okay, it's not stupidity, it's actually greed. And that's one of the things that I try to stress to you, all right? And that greed is going to be your opportunity. Apply some of the lessons. What other lessons do we have from the past that we can apply right now? It just goes on and on and on. You've seen the Fed take the steps already, except right now we're in accelerated pace. Let me show you what an accelerated pace looks like. This is Boeing. If you missed it, Boeing, it rallied huge today. It just rallied massively. Okay, you can learn so much from this. By the way, the Boeing CEO even got on TV. He got on TV and basically said, I will not ever allow the Fed, okay, to own one sliver of my stock, and literally said, I'd rather fly the company into the side of a mountain before allowing the Fed, okay, or the government to bail me out. You got to love them, okay? The stock rallied. Don't think for a second that this thing can't go into bankruptcy. Again, learn lessons from the past. And that could be very smart person just said something very, very stupid. They cut the stock buybacks. They have cash flow problems. It goes on and on. Almost all the lessons you learned could be applicable right now to Boeing. All right? You are going to have to sit tight. You are going to have to wait. I'm telling you, okay, apply the lessons from the past. Your time is coming right now. A couple of things about our members are saying, thank you for your service. Always on time and staff answering some of the emails. Much appreciated. I struggled the last couple of months placing trades you suggested. My own account size not so great. Work carefully. Had to take off some RTS and VIX trades and could not so much. I was having a tough time trading. By the way, this is a tough time trading. Imagine that. This is February 27th. This is the height, okay, of chaos that's been going on lately, okay? But last week, I tried to keep you near you. Handsomely, I made good profits. Thanks for your guidance. Take me through the profits in the midst of these volatile markets. I just felt great belonging to your TheoTrade. With such excellent help and guidance, it's just amazing. Thankful, okay? AC. Now, okay, this is your opportunity. People, what you got to understand right now, and now we're going to get to the deep learning portion of this, we're in a crash. And this is your time to shine, okay? Now it's your turn. This is your time to shine. Now, me, by the way, this monkey knows volatility trades, and you should too. When I say this monkey, yeah, I'm referencing myself. Yeah, I'm good with that. I am just fine with that. This monkey knows volatility, and you better too. All right. So what can implied volatility do for you? A couple things. Okay. And I'm going to go through this because I think some people may already understand volatility, but I want you to have a little bit more depth, a little bit more knowledge, okay, of what we're looking at right now. Listen, okay, everything in the midst of chaos, everything in terms of a crash, it's about implied volatility. It's about implied volatility. It's about implied volatility. I can't stress you that enough. Okay, it's not about, Starbucks and what stock to buy. There's a reason that I bought Starbucks. I'm going to show it to you in a minute. There's a reason I bought Starbucks. Okay, it was a layup. It didn't just have to do with like, whoa, I'm standing in line for 20 minutes. I'm going to show you why it was a layup. Okay, and it has everything to do with implied volatility. And I'm going to show you an opportunity. Okay, that's there right now, like right this second. You can apply it to the markets literally tomorrow. Here's the implied volatility opportunity. First of all, this is a stock, and the stock is trading right at 100. What is volatility? Volatility, let's say, is 20%. Okay, let's say volatility is 20%. What does that really mean? It means that the stock can go up about 20% or down about 20%. And it's supposed to stay in that range 68% of the time. Now, with 68% of the time, that is one standard deviation. Now, bear with me, because if you don't understand this, you're not going to understand the future of what I'm about to show you, okay? So I just want you to understand 20% volatility. Now, I want to ask a question to everybody in here. Is that high or low? Okay? Compared to right now, okay, that's low. Is that high volatility or low volatility? I don't know. Over the last 10 years, okay? Over the last 10 years. 10 years, that's actually been decent. That's actually been decent, though, over the last couple of years. Anybody ever heard of a product called the VIX? Okay, what is the VIX? The VIX is the S&P 500 Volatility Index. The VIX has had a tough time, okay, getting above 15. Getting above 15. Where was it last week? 82. Okay, it got up to like 85, and then I threw up all over the floor. But it's the same thing, okay? What is the VIX telling you? It's volatility, right? So assume that this is the VIX. If this is the VIX, it says that this stock market could go from 100, it can go up to 120 and go down to 80. Now, could this stock move further than this? Of course it can. This stock could go all the way up here, okay, to 200, okay? But can the stock go below what? 0. Can the stock go below 0? No. So it's pretty interesting when you look at a stock, okay? The stock could actually fly as far as 200, but it can only go to 0. Okay. So who cares, right? Who cares? Well, before I go any further, let's look at some current volatilities. Let's get into it right here, right now. Here's Tesla. Okay, some screenshots I've taken over the last day or two. Here's Tesla. And Tesla, if you take a quick glance, okay, what's its volatility like? Check out those numbers, people. Okay, check out those numbers. I just showed you a distribution curve, and I showed you 20% volatility. Now, okay, look at this. Now we're looking at 126% volatility. All right? Is it high? Okay. Anybody? Is that high? You're like, oh, hell yeah, man, that's absolutely insane. I mean, you're going crazy sometimes, because for those of you that understand this business, you're like, that is extraordinarily high. I'm just making sure everybody's on board over here. Okay, everybody on board? I want to see if you realize that that's high, because it's Tesla. Like, everybody's like, oh, I'm panicking. I threw up, on the floor, and it's high. Listen, the marketplace might have 20% volatility, but Tesla all of a sudden has 120% volatility. Now, you want to see something even more interesting? My, what a large volatility you have, Tesla. Something more interesting? Go look at ExxonMobil. Okay, come on, go look at it. Play around if you're on a trading application. By the way, this trading application that you're looking at right here, right now, okay, this trading application happens to be the Thinkorswim platform. Neither here nor there, okay? But on the Thinkorswim platform right here, and I'm just looking at ExxonMobil, and I just want you to see. There's ExxonMobil, and on the right-hand side, look at that. We're looking at like ExxonMobil and we're comparing ExxonMobil volatility is almost as high as Tesla. Almost as high. Because you would think of ExxonMobil, you're like, oh, well, this, I actually took the screenshot yesterday and say, oh, well, you know, it's not that, it's 100%. This thing is actually fighting for its life. Okay. Now, let's continue on. ExxonMobil, Tesla, what else? Okay. Let's take another quick glance. Let's actually look at Amazon. Okay. Amazon has half the volatility of ExxonMobil. That don't even make sense, because if I said, what do you think the volatility of Amazon happens to be? Come on, what do you think the volatility happens to be? You're going to be like, that thing is crazy, man. That's crazy. Okay? I'm freaking out because it's Amazon. Really? Because Amazon has half the volatility right now. Half the volatility of even ExxonMobil. So much can be discerned from volatility. Stock traders, you're blind in this world. You're blind in this world because you don't have, right, implied volatility. You are. And that's the one thing people don't really get. Like stock traders, people that just trade stock, like, I use my MACD and Fibonacci, I got my Bollinger Bands. Okay, come on, baby. If you look at implied volatility, it's going to tell you a whole different world. Because you never would have guessed that, ExxonMobil and Tesla are one and the same right now. Amazon is half the volatility. Okay, so what to do with it? Let me ask you something. What are you going to do with this? You got some cool knowledge so far. What you going to do? All right? And I really mean it. What to do with volatility? Because you look at this and you're like, that sounds kind of cool, right? So volatility, and again, I want to go back to this, denotes kind of how far a stock can move, right? And how much a stock can move. So let's go back to the previous shot over here. And I want you to see something very interesting about ExxonMobil. Okay? These volatilities right there, they also have a price next to them, and it says plus or minus, $7.26. Okay, just rounding down, $7.26. And you go, huh? Because what I'm doing is I'm taking the volatility and I'm translating volatility into stock price movement. $7 is what this stock can move. It's only a $31 stock, okay? And that's $7 plus or minus in the next 25 days. Now, how does that grab you? You go, that scares me. Okay, I'm already afraid and staying at home, and you're scaring me more. I'm not trying to scare you. I'm actually just trying to get you to interpret that volatility can be extrapolated as stock price movement. Are we okay? All right, this is the point where breathe, people. A huge number of people on tonight. I want to make sure everybody understands this stuff. Because understanding it, that's why you're here tonight, right? All right, so now, we look at Amazon. And Amazon, you're like, okay, I get it, right? Amazon's volatility, look at this. Amazon could move 200. It can move $220, but it's Amazon. $220 in the next 25 days. But that's not that much. On a percentage basis, the ExxonMobil move is way bigger. ExxonMobil's fighting for its life. ExxonMobil is going to move like a third of its value, or a quarter of its value inside of the next couple of days. Amazon is moving like $200, which is a big nothing against a $2,000 stock. It's only a 10% move. The Dow moved over 10% today. Amazon's moving like less than the Dow right now. Think about that for a second. Amazon's more stable than the Dow. Whoever thought Jeff Bezos more stable, than the Dow Jones Industrial Average? Huh? That's what you can learn from implied volatility. But what do you do with it? Because all of this is for nothing if you don't understand what to do with it. It sounds like a real party. It looks cool. How do you use it? How do you use it? Understanding implied volatility is a step in the right direction. Yeah? Now, how does this stuff translate into profits? Now bear with me because this is going to go deep. I'm going to bring you into a trading concept that less than 1% of market participants are aware exists. Less than 1% of market participants know how to do this. Even less, ever figure out how to trade this concept. How high can implied volatility go? I want to know. How high can IV go? I'm pretty sure it can go high. Let's say volatility hits 100%. You just saw it at 100% a moment ago. That's a what? It's a $100 standard deviation. What does that mean? If you have a stock trading right there, all right, let me change the color over here to make this a little bit easier. If you have a stock like right there at 100, and it says that that stock has a 100% implied volatility. Do you realize over the next year, that implies that that stock could go up to 200 or down to 0. And it's supposed to stay in that range 68% of the time. Okay? That's what that means. And you go, well, that's kind of interesting. When you start getting volatilities over 100%, are you aware that it actually breaks the entire model of the marketplace? And you go, what the hell are you talking about? That was volatility at 100%. I'm going to tell you again. Less than 1% of market participants even understand this concept. Less than that know how to trade it. What about 200% implied volatility? How does 200% implied volatility grab you? Is it possible? Is it plausible? Okay. Can you actually have 200% implied volatility? I want to know. Can you have 200% implied volatility? Absolutely. I'm going to show it to you here in a minute. Now, we have a $100 stock. Let me teach the concept, and then we're going to show it to you live. We have a $100 stock. It has a 200% IV. What does that mean? Well, remember, when we had a 100 IV, it means it could go up $100 or down $100. But now we have a 200 IV, which means the stock could go what? Up, okay, $200, or down what? Come on, where could the stock go? I want to know. Okay, this is open for your interpretation. Everybody here is here to learn tonight. Go up 200 or down where? You're right. It could only go to 0. It's actually one of the flaws. It's one of the flaws of all option modeling. It is a flaw. And because of that flaw, stocks can only go to 0. Because the flaw, it actually breaks the mold. Okay? You have $100 up 200. Effectively, okay? How about a 200% implied volatility? Do you see anything that's weighted to your favor? Absolutely. 200% implied volatility. It's unbelievable if you know how to trade it. You want to learn how to trade it? Check this out. First of all, does it exist in real time? This is forward. This is forward. This is a screenshot that I took yesterday. And I'm going to tell you right now, okay, I am not going to display the exact position on this one. There are certain things, better left for another day. You can see I've got multiple positions here, 4 days, 11 days, 17 days out, okay? I want you to look on the right-hand side of the screen. Don't even worry about my positions right now, okay? I want you to look on the right-hand side of my screen, okay? And I say, do you see it? What do you see? This is a $4 stock, okay? Where can a $4 stock go? It can go up or it can go to 0. If you look down below over here, specifically out 300 days and 700 days almost, the expected move is larger than the stock price. Okay? It breaks the model, and you can actually lock in profitability. All right? Your loss in here, if there was one, would be negligible. And the only way you could take a loss is if the stock literally goes to 0. If Ford goes out of business, I'm not going to lie to you, you could take a very, very minimal loss at this particular point in time. Okay? You have a situation here to the upside where you literally, okay, can risk, and I'm just going to put it in this context, you can risk 1, okay, to make approximately 4. You can risk 1 to be able to make 4 if you know how to actually construct the position, because what we're doing right now, all right, is we're actually breaking the entire logic of the option model. The option model is a simple one. Okay, you have a $4 stock, and that $4 stock is sitting on top of, in many cases, a 200% IV. Well, a 200% implied volatility. That doesn't mean the stock can go to 8. Okay, where can the stock go? It can go to 12, it can go to 16. Stock could even go to 20. Right? I mean, it hasn't been there in years, but let's say that this stock could easily go up to $12. Okay, put a year on it. I don't care. Put a year on it. Where can the stock go to the downside? 0. That's it. Okay, and in a 200% implied volatility, the implication, all right, is that it doesn't necessarily just move up 4, but the 200% implied volatility, the implication is it moves to 8 would be inside 1 deviation, 12, okay, that's a what? That's a 1 deviation move to move to $12. You could even easily move to as high as like 16. That's outside the 1 standard deviation. you have to think about this for a second. Most people, they'll see it, okay, but they don't know necessarily how to trade it. The opportunity right now are absolutely huge. It is directly in front of you. And this one totally blows people's minds. You just have to learn how to go about trading these. And you have to understand, I could take a loss in this one. I could take a loss in this one. I don't just do forward. I'm going to go out and I'm going to find 6, 7 to 10 opportunities similar to this. And I'm going to scatter, okay, hundreds of thousands of dollars into 6, 7 opportunities. Okay? Who cares if I lose on one? I'm going to have 1 to 4 shots in hundreds of thousands of dollars spreading out right here, right now. Even if the stock does go down, I don't care. I'll have to hold the stock for a little longer, but, and you don't have to have a huge amount of capital to do this. I'm actually talking about the stock, but you're going to be doing it predominantly with the options. You don't have to have a huge amount of capital to do it. You're going to go out, you're going to spread out a little capital so I don't just have, Ford goes bankrupt, it goes bankrupt. Okay? I'm not going to be happy about that. I don't want to see any company go under. Okay? And Boeing is actually in similar context, but the Boeing volatility isn't quite as high over here. And people, they don't usually get it right away. But if you understand a little bit about options, you'll get like out here, it's a $4 stock with a $5.50 move priced in, which is impossible because you can't move $5.50 to the downside. Okay? You can't move like that. It doesn't work, okay, like that. Therefore, there is a monstrosity of an edge. Listen, implied volatility opportunities, they're everywhere. Every one of you right now, people, you got to shake off the losses. This is it. This is the time to make money. I don't want to come on here and, oh, you lost part of your 401k, you lost this. Forget it. You need to move forward. Everybody needs to move forward because you don't know exactly what the future holds. All you know is you got a lot of volatility, and that volatility is your opportunity. There are very few opportunities in this business, very few, that present themselves as prevalently as what we're going to witness following the Corona crash and all of the fallout. Fallout is your opportunity. Gear up. Gear up now. Okay? You want to profit in the midst of extreme volatility. These are the I'm showing you one opportunity in here, and I cannot stress that enough, right? When I say this is the beginning, this is it. This is the beginning of the opportunity. We got to start to work towards it. I'll show you another trade. Here, okay, you think that you can only make money to the downside, right? Here, total layup position, okay? When I say another layup position, the reason I kind of call this one a layup, this is a trade I actually put on yesterday. I closed it today. This is just a back ratio. I put it on for a 20-cent credit. That kind of crap can only be done in this huge volatility. Now, the volatility is going to subside a little bit. I know it's going to subside. Oh, the volatility is going to go back down. What's it going to go back down? To the 30 range? To the 25 range? We're going to be rocking right now. We're going to be rocking through summer. We're going to be rocking the next 6 months. This crap is not going away. Forget about the coronavirus for a second, okay? The coronavirus just cracked open Pandora's box, and it is pissed right now, and that volatility is not going away. We got more problems to work through than anybody can even imagine. We haven't even passed the stimulus bill yet, okay? By the way, that kind of crap took, month plus to pass in 2008. They're going to work this crap out in the next, It took a month back then. Here, we're talking about a couple of hours, and they're going to have a stimulus bill, okay? We're moving at light speed, but that's not getting to the bigger issues. And the bigger issues, they're coming. And it's going to continue to keep volatility high. And a back ratio like this, when I call it a little bit of a layup, it was put on for a 20-cent credit. You know what's cool about this? This is a bullish trade. In the back ratio, if the market had crashed from here, I still would have kept the 20 cents. I still would have kept the 20 cents, but it's a bullish trade. Okay? So I knew that if the marketplace crashed, I'd keep the 20 cents. But if the marketplace rallied, I have a huge shot to the upside. Did I know that the marketplace was going to rally the next day? Absolutely not. But I just figured I was tired. I figured the market was tired and take a shot. Okay. This trade was put on literally yesterday, and I closed one of the contracts today. I don't want to sugarcoat this. I left a bunch of this trade on. I want to see how it turns out. So I actually put the trade on for a 20-cent credit. That means, okay, $20 was given to me up front, and I received an additional, $3 today, which turns into $300. So if If I put 20 bucks out there initially and it's not $20, $20 credit, I got another 300. I'm up to a $320 credit. Now, is there risk in the trade? There is, but I can actually mitigate a lot of that risk. This is actually a portion, if it's a back ratio, but it's actually a portion of the infinity spread. Okay, this is the kind of stuff right now, if you do not have a lot of capital and you don't want to be involved messing around with buying stock, okay, I can show you, as I did in the previous example, to buy some stock and use Ford. But this is a volatility type trade. And they're available every single day in this business. Okay, these are big returns. Big returns. Only volatility can provide this. What we've been in the last 8-10 years, that's a little harder. This is the time to make the money. That's what people don't get, what our members are saying. Randall and I go back now a couple of years. I agree. By the way, this comes from our chat room, so we're having conversations back and forth, and this is not even a conversation with me. I agree. Lots are being forced to liquidate. We're actually talking about the market puking its guts out. I've been waiting for this to happen, okay, with lots of spare cash. But now that it's here, okay, and I'm doing very well, I really not wish it ever, never happened, whatever. Okay. Too many people are getting hurt. I mean, I couldn't agree with him more in here. He actually commented, by the way, this one was before. Last week, my best week ever. Yesterday, my best day ever. So all in all, I would say it's treating me well. By the way, after he said this, he was feeling a little guilty, and that's why he came out with the next comment over here. I just can't stress enough, people. What better time? Okay. You got to learn a new skill set that'll last a lifetime. When will you ever have time like this again? Let's not even talk about what we've embarked upon thus far. You're afforded an opportunity. You're working from home. Even if you're working from home, hide from the kids, you've got time. You're trapped pretty much, okay? You're sequestered at home. Maybe it's only going to be, people think it's going to be mid-April. I'm going to bet against that one. I think you're going to have a lot more time than that. You're going to have at least, okay, I would guess the next month at home. If you're still working, fine, do it part-time. You got hours during the day. If you're quarantined, sequestered, this is how to emerge stronger, okay, and in better financial shape. Don't look back. You got to look forward, okay? And I get that some people are glued to their screen over here. I don't want you guys to be glued to your screen. All the trades that I've shown today were displayed live at TheoTrade. The trade results we're showing, they're perfect for part-timers. I don't want you to think, again, you have to sit in front of your screen all day long, glued to the screen. Right now, quite frankly, everybody is right now because everybody wants to watch a train wreck on a day-to-day basis. We're all basically at home looking at our trading screens throughout the course of the day, and you typically don't get to do that. The spread trades, okay, that I've shown you today, they're totally hands-off. They use set it and forget it order types. You do not have to monitor these things, okay? Ironically, I've had hundreds and hundreds of emails, okay, in the last couple of weeks. Hundreds of emails. I can't tell you how many physicians all of a sudden they're like, we can't work, we're at home. Okay, we're taking appointments from home over video cameras and so forth, and they're like, yeah, set some orders, but they're like, it's awesome. We get to actually sit, we get to learn for the first time in a long time. Okay, but recognize at the same time, eventually you are going back to work, even if a fraction of your time is good enough to see results, right? You don't have to necessarily be glued to the computer screen. I've showed you a couple of trades today, and these trades as a whole, call them volatility spreads. There's a bunch of different types of volatility spreads, but the attributes of the volatility spreads are undeniable. You never have to buy the stock. You define your risk. Risk is limited to precisely your comfort level. You don't use stop orders with any of the crap that I'm talking about. You don't use stop orders in any of this. It's the perfect, okay? These are the perfect spread types too. If you need to reduce portfolio risk, if you're still worried about us going down, use a couple of these spreads, okay? It's also an excellent tool if you just want to build up a smaller account, or I got a better one. Maybe your account now is smaller and you want to rebuild it. I get it. You got to learn to use some volatility spreads. The next portion of this is you got to learn to build these trades. Okay. First of all, don't let options intimidate you. I'm so beyond that. People are like, he said the O word. You got the time right now. Learn. You have the time right now. The spread below is being done for a 20-cent credit. But these spreads, this is part of a back ratio. This is part of an infinity spread. This thing, okay, this is the mother of all trades. This is a power saw, okay? Used correctly, it's quick, it's fast, It's clean. It's a great way to make returns. Used incorrectly, you're going to lop off a couple of fingers. And I cannot stress that to you enough. Be a little cautious, okay? But at the same time, it's the same thing if you wanted to go out and like cut down a tree. You're going to use a handsaw or you're going to use a chainsaw. Of course you're going to use a chainsaw to cut down a tree, okay? Doesn't mean it's necessarily the safest way, but it's the quickest, fastest, and it will be the safest way as long as you know how to use a chainsaw. The same thing is true of options. You know how to use them, it's going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace, okay? But you don't use it correctly, again, you can cut off a couple of fingers. And I always use that analogy because people they still have this intimidation factor, and you got to get through it, okay? Your learning curve is now. All right, you could trade volatility spreads. By the way, you could trade this stuff in an IRA account. Everything I showed you today was done in an IRA account. Every single trade. Maybe you don't know options. You have limited experience. Don't let them intimidate you. You need these strategies right now. For the foreseeable future, you need to have options because you have to mitigate risk. Okay, I can't tell you you're going to be right. Don't let options intimidate you. Again, it's important. We can show you how and when to place spreads like this in a matter of a few hours. What we do here at TheoTrade, okay, what we do here, we create detailed recipes for every trading strategy, including volatility spreads. You wouldn't bake a cake without a recipe. Why do you trade without one? This is what you need to know, though, to successfully enter and exit volatility spreads, right? So the type of trades that I'm showing there, and I showed a bunch of trades to begin with and talked a little bit about some implied volatility and so forth, but where do you go from here? What makes a viable candidate? Like what makes a viable volatility spread candidate? Why did I trade IWM? Why did I trade the spiders? Why did I bring up Ford a little while ago? Okay, what volatility should I seek out? Like, listen, the irony is this is a volatile market and I need volatility. Okay, but what volatility is right? What's too much? What's too little? If you're going to trade options, what options expiration do you select? What should be the delta of the option I buy? You're like, I don't even know what delta is. Good, we can teach you that. Okay, what do I sell against my options position? Okay, because I don't want to have to use, stop orders and so forth. How do I build the trade? What's the right amount of risk for me? Let me show you what we do here at TheoTrade. All we do, we create what? Recipes and trading. And I say all we do, but that's everything. That's what we do here is create a recipe in trading. And what people don't get about this business isn't like, I got a hunch, I'm going to bet me a bunch. It's none of that. Okay? Trading, it's always about answering the what ifs. What might be a good stock or ETF candidate for a volatility spread? What's the correct options expiration cycle to buy my volatility spreads? How much capital do I commit to each one of these trades? What's the strike price options I need to buy and sell, and how many? And growing a small account, what should my allocation be? We have the answers. We build recipes with definitive criteria, checklists for every strategy, each unique variable you're going to encounter. When I say variable, what do I mean? Okay. First of all, checklist. This is a checklist, like a pre-flight checklist, just like any pilot would go through. Yeah. If you had if you're going to fly an aircraft, you have to whip out a checklist and be like, hey, check. They don't just turn the key and take off. Okay. Ain't that easy. For each strategy, you've also got variables. What if the stock goes up? What if the stock goes down? What if the expiration is approaching? What am I going to do if the stock goes down huge? Can I recover from this? Okay. Everything that you're going to encounter. Because again, we give you the answer to the questions. We actually have flowcharts to each and every one of these flowcharts. What's the right probability for my trade? How many option contracts do I trade for my account size? When do I close my volatility spreads? What if the stock sails off big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? The how, the when, the why, at what price? It's just the beginning of the variables that you're going to face with these volatility spreads. It's literally just the beginning. Okay, listen, you can read a huge amount about options online. You can Google it right now. Okay, maybe right here, right now, you even know how to build a couple of the trades. Some people know how to build a couple of, a few spreads here and there. What you're going to need, though, is TheoTrade's recipe for success. What we give you here, 20 plus years of trading experience. I had access to client order flow for 15 years. Okay, I viewed and studied millions of trading accounts. When I left TD Ameritrade in 2015, we had 7 million accounts. We studied those accounts. I ran the entire education division. We had 768 people, okay, in my organization at that point. 768 people, okay, and 15 million, all right, at one point clients. By the way, that was after I left. They now have 15 million clients. When I was there, 7 million clients that we studied. Ran the education, okay, of that group for 15 years. And we had the largest option order flow in the industry. That's how you can learn a tremendous amount about trading. And that's where these recipes come from. That's what we do here at TheoTrade. Criteria is your recipe for success. You got to follow the strategies, but more importantly, you got to follow the corresponding criteria, and it requires the utmost attention to detail. We spent years fine-tuning the trades that you just saw. You saw risk twist spreads. You saw a VIX volatility spread. You saw in-out spreads, okay? But you saw an infinity spread in here. But you need to learn, okay, to survive and thrive in volatility. Okay. Again, we spent years. When you approach a section on criteria, you follow the steps to build a trade. We have a class called Guide to Surviving and Thriving in Extreme Volatility. Okay. The class is archived. We just recorded this course. It is a 3-hour course. It is archived. It has 24/7 access. Okay. Or you can download it. Now, we give you the download capability because, you might not necessarily have connectivity all the time. Here at TheoTrade, okay, not only do we actually give you access to the class, we give you access to our mobile applications for both iOS and Android. The class slide deck that has all the entry and exit criteria, the checklist, is available immediately. The class is $497. And again, you literally start watching it tonight, now, this evening. I know it's already getting late, and I've gone way over on time over here. It's okay. It's okay because I'm telling you, first of all, you're sequestered at home. Secondly, okay, tonight, we recognize what's going on in the world. We get it, okay? And we're actually going to add some really substantial bonuses to this, okay? Hang with me here for the next couple of minutes. You're going to want to hear this because this class, it's just the very beginning. I mean, the absolute, okay, tip of what we are going to offer in terms of a guide to surviving and thriving in extreme volatility. This class is critical, okay? And I'm going to tell you right now, you're not going to make it. You're not going to make it very well through this without knowing a couple of key pieces of logic. I tried to give a few of those to you tonight. We need a full-blown 3-hour course, okay, to unleash everything upon you with definitive criteria so you can actually check, am I doing this right in the midst of this volatility? No matter how fast the marketplace happens to be, this is going to help you slow it down, okay? Save capital first, and it's going to learn to be defensive, and then you're going to learn how to go on the offense, okay? You got to learn to control risk first, then we're going to go on the offense. In fact, here's actually the key points. This is the class curriculum. This is exactly what we teach in this class. You're going to learn defensive structuring of positions, so even the most extreme risk is not going to keep you awake at night. I can't stress this enough because this class is ready to go. We have it ready to go. Why do we have it ready to go? Because look at the middle of you're in it right now. You're in it, okay? We'll actually teach you defensive skills. You can start using them tomorrow. Number 2, discover how you can aggregate all of your market risk and know precisely how much you're willing to make or lose before the market moves. Number 3, understand volatility like never before, and more importantly, how to harness the extreme moves. Number 4, position size correctly. Bouts of higher volatility, they're not going to bother you. Learn why allocation is critical. If you can't allocate and know what your allocations are, you're already dead. Number 5, go on the offense. Extreme volatility is unbelievable opportunity. Okay, we're actually going to teach different volatility spreads with step-by-step criteria, entry and exit criteria for each of these. Number 6, build your own volatility spreads. Okay, you're going to learn how to build it with that criteria, or you can follow me, and I'll get to that here in a moment. Number 7, learn to use set it and forget it order types. Those are good till canceled, so you don't have to be glued to the computer screen. Number 8, volatility spreads can be done in a trading account of $2,000. You can do all the trades that I've discussed in an IRA account. Minimal options experience, smaller accounts looking for large upside potential. You will have to follow the recipes to be able to build the trade. Now, as I said a moment ago, I know everybody comes out tonight and they want a little bit of a bonus, and we're going to do just that. Okay? TheoTrade, listen, we built TheoTrade to differentiate from what this entire education business is all about here. Like stock market education, options education. Be very frank with you. There's a whole lot of crap out there. Okay? We get that you go out there and you've taken a class. Okay? Now, how many people that are attending this evening have taken a class before? Just tell me how many people here have attended like something, okay, and taken a class. Because the vast majority are like, yeah, I took a class, I paid $200 for it. Hey, I took a class, I paid $1,000 for it. Some people have taken classes and paid $5,000 for it. You take a class, pay $500 for it. What do they want? Another $500. Why do they want another $500? Because you're special. They'll sell you an indicator. Oh, by the way, you get sold an indicator, and then on the indicator, you have to take another class to learn how to use the indicator that they just sold you. Like, we get it, okay? The entire education business, a lot of crap out there. There just is, okay? And I'm going to tell you, you will never find another firm that has the kind of experience that we have here at TheoTrade. TheoTrade is not just me. It's not just Don Kaufman's show, okay? I'm going to introduce you to some of the instructors here momentarily. We get this. You want everything. You want everything to trade. You want everything to invest. You want it at one place. You want indicators. You want everything at one place and at one price. And that's exactly what we do. The first bonus that we provide you tonight, we're going to give you access to our entire library of classes. There's 88 trading classes. Okay. We have 88 classes right now in the can. That basically means there's 88 classes. They're ready. That includes the Guide to Surviving and Thriving in Extreme Volatility. That's archived. That's available right now. All of the other classes in here are also ready to go. Guide to Small Account Growth with In-Out Spreads. Okay? Black Book Spreads. How to Collect Income Being Short. The next big short. This is the risk twist spread. You saw those risk twists. That was the mother of all trades. Okay? Guide to Selling High Probability Spreads. Iron Condor. Selling Premium, Minimizing Your Risk. Survive and Thrive at Extreme Volatility. Okay? Day Trading NASDAQ Futures Class. Covered Calls. Essential Skills for Consistency and Income. The Top 10 Skills for Growing a Small Account. Pairs Trading. This is just scraping the surface of 88 classes. By the way, in addition to that, we're also going to have new monthly classes. We give you the access to the full library. Tonight, you can watch every class. For how long? We're going to get to that here in a moment. We're giving you access to over $9,000 in classes alone. It's like literally each one of these classes, we've sold them piecemeal before. We've sold some classes for $150, some classes for $297. Good classes, like the one that, Survive and Thrive in Extreme Volatility, easily $500 class. Okay, easily. We'll give you access to all of them. Okay, why? You realize what you're involved in right now? Okay, I'm not telling you got to watch 88 classes, but I am telling you right now, probably going to want to watch a couple of them. Okay, and we don't mind providing them to you. Why? Listen, they're in the can. They're ready to go. I don't want to hold anything back from you. Unleash the beast upon you. Let you determine the speed of your education. Okay? We give you everything. It's the full Monty. By the way, these 88 classes, as I said a second ago, this isn't me. This isn't just like a one-trick pony. Okay? Are you aware that we have 7 full-time instructors here? It's myself, Don Kaufman. Then we have Jeff Bierman, analyst, trader, and former chief market technician for TD Ameritrade. I pulled Jeff away from TD Ameritrade along with me. For those of you who have ever been on the Thinkorswim charts, you owe a debt, a little gratitude maybe towards Jeff Bierman. He built over half the studies on the Thinkorswim charts. Nobody knows more about technical analysis than Jeff. By the way, Jeff is also a professor of finance at Loyola in Chicago. So Jeff actually moonlights with us right now. Although since that school, Loyola, is shut down right now, Jeff is moonlighting a little bit more with us. Okay. Next on the list, Matt Williamson. He's our market neutral. He's our premium selling option strategist. He's an option selling geek. Okay. Next on the list, Corey Rosenblum, senior strategist and our resident swing trader. This is actually a little bit shorter term trades over here if it's so inclined. Next on the list, we actually have a macroeconomics super geek, another individual that we pulled away from TD Ameritrade. This is Brandon Chapman. Okay, he's our CMT, as I said, macroeconomics, technicals, and fundamentals. Tell you a little bit about Brandon Chapman. Okay, years ago, when I actually was running part of the TD Ameritrade education, Brandon actually wrote a lot of the course material. There was a course that we put together at TD Ameritrade. That course was 18 months long. 18 months long. Okay, and it cost $24,000 for 18 months. I promise you that some of you on tonight have actually taken that course through there and paid the full 24 grand for it. Brandon actually wrote that particular book, and he'll tell you firsthand knowledge. what we provide here at TheoTrade will absolutely blow away what we used to do at TD Ameritrade that people used to pay $24,000 for. Okay. Next on the list, Steve Slim Miller, 43-year veteran stock options and futures trader. Okay. Last but definitely not least, Tony Rago. We have a NASDAQ. He's a futures trader. He just sits there all day and trades intraday, all day, every day. That's what we actually provide here at TheoTrade. 7 full-time instructors. That's where you get these 88 classes from. Now, the second bonus. The second bonus, and this one's huge. We're going to give you an all-access TheoTrade VIP membership pass free. Okay. Tonight, you start access to 3 months of unlimited Theo stream. What is it? We'll give you access to our live trading room. We have a live trading room. I'll show it to you here momentarily. It's live 6 hours a day. Traders are providing real-time trade ideas, real-time market insights, real-time analysis. We also have text and push notification on here. So for those of you, again, eventually you're going back to work, we do text and push notification, including all these volatility spreads. We have 5 different trading portfolios. We have daily coaching sessions with topics on stocks, options, and futures. And our instructors directly answer your trading questions via email. We don't hide from anything. You're going to email us and you're going to say, can I do this trade? Should I do this trade? We'll say to you, that's the worst thing I've ever seen before in my life. We'll give it to you as straight as possible. Or it's the greatest trade I've ever seen. Love it. Okay. We will answer your questions via email. It's access to over $997 in support, trades, and insight. I cannot stress this enough. Just the email access. But by the way, we will also give you a live trading chat room. It's 6 hours a day. I know you can't watch all of it. We archive everything. And all of it's available off the mobile applications. If you can't necessarily watch it live, watch it on the mobile application. It's recorded. Nobody can watch 6 hours a day every single day. But if you want to, you absolutely can. Right now, day-to-day basis, there are over 4,000 people, in our trading room now, on a day-to-day, over 4,000. It's absolutely mind-boggling numbers because everybody's home. You're sitting in front of the computers anyway. That's bonus number 2. So we give you access to all the different classes, 88 different classes. We give you access to everything we do here. 3 months, unlimited access to all the coaching sessions, everything we do, live trading, all the trades that we do, we push out to you live, In addition to it, we'll also give you 59 proprietary indicators and scans. Auto expected move, gravity points, RSI Laguerre, the Quantix, NQ levels, next generation squeeze indicator, Sizzle index, Theo Quant trade setup, unusual put options activity, SPX expected move. We're giving you access to over $1,800 in indicators and scans. All of these, by the way, we don't take them back. They're yours. They're yours tonight. What we do here, well, we include. That's what we do here at TheoTrade. TheoTrade includes everything you're going to need to invest in trade. We give you classes. We give you coaching sessions. We give you email access to our instructors. We give you a live trading chat room. We give you live trades. We're always doing live trades. We give you indicators and scans. We give you mobile access 24/7. Everything that you need to succeed. What we built here is TheoTrade is the Netflix for traders. If you're going to binge watch something right now, binge watch a little bit on TheoTrade. All of this evening, is $297 for 3 months. It's total Theo. It's $297 for 3 months. That will include, and again, I want to go over everything it includes so there are no questions whatsoever. And I also want everybody to know right now, it's $297 for 3 months. Somebody already came into the chat room and said, what happens after 3 months? Whatever you want to have happen. This is not a membership. This is not a membership. This is not an introductory offer. I can't stand any of that crap and that garbage. It's $297 for 3 months. You're getting everything we do. Everything we've done, everything that we have done. We've been around for over 4 years. Everything that we've done. We've only been around for 4 years. Why? I only left TD Ameritrade, in 2015. We launched TheoTrade in early 2016. Literally like January 2nd, we launched. We've been around. Again, we have over 4 years of content, 88 classes, everything you could ever imagine in coaching sessions. It's $297. If you want to do it after 3 months, pay us another $297. If you don't worry. We don't We don't do any reoccurring monthly payments, none of that garbage. Okay? It includes the guide to surviving and thriving in extreme volatility. The archive is available immediately. It's included in this. Tonight you can watch the class. Then it also includes access to 88 trading classes, all available immediately on demand. In addition, we will have new monthly classes. That's important. There's always new stuff coming out here at TheoTrade. Why? Because we have 7 instructors. We will give you access to our live trading chat room. We give you real trade ideas, real-time market insights, okay, analysis, and we broadcast a minimum of 6 hours per day. We give you indicators. There's 59 proprietary indicators and scans. We give you text and push notification for trade ideas and 5 distinct portfolios. Daily coaching sessions, timely topics. Coaching session, what is it? It's continued education. Every single day we do multiple coaching sessions with continued education. Instructors also will answer your trading questions. Go right now to theotrade.com/risk. It's theotrade.com/risk. I'm going to show you exactly why you want to go to that address right now. We're actually going to make this a completely riskless trade. TheoTrade is totally riskless. We're going to give you everything you need to start trading from absolute novice to expert. By the way, if you've never had any experience whatsoever, I'm going to show you here, okay, in just a brief moment, okay, we have an entire section of TheoTrade, okay, and I'm actually going to bring this up here for you guys for a second, but I'll bring it up here again in a moment. We have an entire section here in TheoTrade, okay, that's, it's for people that have never, ever done any of this before. And again, I'll kind of reiterate this, and I'm going to bring it back up here momentarily. Give me a second. Where did it go? Okay, here it is, under Start Here. You know what Start Here is? Options 101. I've never traded before, but I'll come back to that in a second, okay? TheoTrade's a completely riskless trade. We'll give you a money-back guarantee. Listen, I want to make something clear to everybody. You tuned in tonight. It's $297. $297 to us is not going to be the end of the world. I don't know what kind of situation that anybody here is in right now, okay? Things could be tight. Things might not be tight. Some people took some losses in the marketplace. Some of you guys are not working right now. It's a money-back guarantee. What we do, trade with us over the next 3 months. If you're not completely satisfied, email support@theotrade.com. Provide us details of your trades. Receive a full refund. Now, we don't quantify what satisfied happens to be. Trade with us. Okay? Trade with us for the next 3 months. There's a couple stipulations over here. By the way, these stipulations, I think they're fair. You have to do 10 trades. 10 trades in the next 3 months, following our criteria, not your made-up stuff. You have to actually do initial account value must exceed $2,000. You must follow our criteria. That's the second time I've stressed that. Oh, and the trades that you do have to be real. You can't just say, I paper traded and I am unsatisfied. No, people that come here, they trade. I think that's fair. Put $297 at this, okay? Trade with us for the next 3 months. 10 trades. If you're not happy, okay, this ain't paper trading, people. Give us the account statements. Listen, we'll just part friends. I want you guys to know you're not happy with us. Get your $297 back, okay? It's $297. That's not going to exactly break us. We have right now, okay, over 4,200 plus people that are in TheoTrade and absorbing this material right now. Over 4,000. There's nobody even close to that in terms of magnitude. Any site, anywhere that has those kind of numbers on there on a day-to-day basis. You know what? We don't even have membership. It's 3 months. If you don't like it after 3 months, we'll give you your money back. If you like it after 3 months, pay another $297. We get it, okay? We want you guys to be happy, okay? Regardless of what the marketplace is going to throw us, we want you to be happy. We want you to look, okay, at what we have in here, and we want you to realize it's riskless for you, okay? Listen, when I say it's riskless, it's totally riskless, and we will give that $297 back. We don't jump through a bunch of hoops and crap like that. Listen, at TheoTrade, get into TheoTrade now. We're going to work with you directly. Tonight, we do 30 spots on the TheoTrade riskless deal. By the way, we have almost 1,000 people on tonight. The reason we do 30 spots over there, okay? Listen, there's 1,000 of you, and there's 7 instructors here. There's only so many emails we can possibly answer. On the riskless side of things, you want to do it? Do it, okay? It's a matter of trade size. We trade live. Unlimited email mentoring. That's one of the reasons we limit it to 30 spots. Every one of you enroll for TheoTrade. But 30 of you are going to get a completely riskless ride. The first 30 to enroll tonight get a completely riskless ride on us. Send us your trades. The $297 offer, never been available before. Okay, we've never done it like this before. We don't want to lock anybody into a membership. We don't want you to think this is an introductory rate. Okay, what you see is what you get. And if you don't like it, get your $297 back. That's the way it should be. Everything, okay, that we offer here. 88 classes, all the different archives in here. In fact, I'm going to show you those momentarily, and I'm going to answer some of your questions here. By the way, what our members are saying. John Haggerty, okay, also took out calls trade in AMD yesterday. Just closed that one for a 55% return. Mike, this is from Mike. It says, Don, I got out of Walmart spread. All right. Oh, by the way, all of these comments today, this is from our chat room. This is today. This is obviously today. I got out of the Walmart spread, okay, for cost 90 cents, made $1.55. This is actually John. Happens to be yesterday. Sold Amazon, okay, calls, $212 each? Nice, okay. These are huge trades. I'm going to review everything you're going to get, and I'm going to answer a couple of questions right now. This is TheoTrade access that you get today for $297. Okay, it's everything that we do here. And then when I say everything we do here at TheoTrade is $297 for 3 months. We give you the guide to surviving and thriving in extreme volatility. It's archived. It's available immediately. It includes access to 3 months. There's daily trading chat room 6 hours a day. Everything is archived 24/7. You can even download it onto our mobile applications. We give you free access to the mobile applications, text push notifications, trading indicators and scans, coaching sessions. Okay. Bonus number 2 over here, we give you 88 classes. There's classes, by the way, and I'm going to show you those in a minute. There's day trading, there's swing trading, there's technical, trading, there's beginner options trading, advanced options trading, much more. I mean, there's just huge numbers of classes. As I said, I'll take you to that. Now, before I actually show you a little bit about TheoTrade, follow with me here. TheoTrade.com/risk. And I'm actually going to pull this back up over here. Again, it's TheoTrade.com/risk. Follow me to this link for the cumulative ticks and quad indicator. So I'm actually going to pop over specifically to that link right now. Okay, here is the link. Let's make sure you guys see that all right. This is the guide to surviving and thriving in extreme volatility. Okay, on this link, for those of you looking for the indicator, all you have to do is scroll, okay, just down towards the bottom of the page. Okay, towards the bottom of the page, there's the quant indicator for Thinkorswim. By the way, we're here to support live. For those of you, if you're enrolling for this right now, again, the first 30 people enrolled into it, it's totally riskless. All you do is click add to cart. Add to cart, it's actually going to open up a separate link. It took a second there. There's a lot of people clicking on it right now. Open up a separate link, billing information, so forth. Okay, I want to reiterate something, and the reason I'm pulling this up here. Okay, we will not be authorized to ever charge your card again. And that's the most important thing. It's why I'm pulling up this particular page. We are not authorized to charge your card again. This is not a membership. It's a one-time charge of $297, period. Okay. Now, with that, again, click add to cart. I'm going to answer a couple of questions here momentarily. I want to reiterate something here. Okay. The web address is theotrade.com/risk. Before I go any further, I want to show you a little bit about TheoTrade. I want to actually take you to TheoTrade. This is TheoTrade. This is it. This is actually the site. Okay, inside of the site, this is where we broadcast day to day. That goes live and we start streaming in here. This is the chat room. Okay, people are chatting pretty much right now. Okay, if you want to get an idea of how many people are in here, it's everybody. You can have a nickname. You can even put like a little emoji icon or whatever we call it in here. It's avatar. You could scroll back, but I just wanted to show you how many people are in here day-to-day basis. Okay, it just goes and goes and goes and goes. So you can communicate with any of our clients. We encourage you to communicate with clients. Clients share ideas. That will go live tomorrow morning, 10 minutes before the cash open. The next thing in here, okay, I like to always show you the start here. If you're brand new, if you're a novice to this business, start here. Okay, these are novice videos. We take you from the absolute basics to the extreme. Okay, that's what this is for, and people say, well, okay, I get it, but I understand options a little bit. Maybe if you understand options, you want to see what the classes look like. Okay, this is the archive. This is where the 88 classes, this is where they live. Okay, that's where the 88 classes live. There's option strategies classes and newbie classes and technical analysis and day trading and stock classes and futures classes and hedging strategies and trend trading, okay, pairs trading and mindset. Want to see the option strategy classes? You have access to all of this. I'm going to make that clear right now, okay? From like right here, right now, okay? You're going to enroll for it. In about 12 minutes after you enroll, you will receive the username and password. We'll authenticate you, and you're off enrolling. All of the classes that you have access to are right here, okay? The most recent class that we've done is Guide to Surviving and Thriving in Extreme Volatility. And I'm telling you, okay, $297, you're going to learn more in the first 10 minutes of that class, okay? You're going to kick yourself and think, I wish I knew this stuff, okay, a year ago. I wish I knew this stuff 10 years ago. The first few minutes of the class, okay, is going to be worth its weight in gold to you. That's one course, and don't be worried, okay, about what you're going to learn here. Again, we're going to take you from the basics to the extreme. In some of you, maybe you're a little bit more extreme in this business. I promise you, we'll take you to the outer limits of what's even possible in this business, okay? This is also our member home. The member home, you can search for any topic, any genre of trade in here, okay, and it's available. Type in any topic, delta volume, in out, volatility, active trader. It just goes on and on and on and on. You want to learn about in outs? Okay. Every single title involving in out spreads is in here. Every single one of them. These are all coaching sessions. Okay. In out spreads quiz. All right. The diamond in outs. It just goes on and on and on. There's so much in TheoTrade. Okay. You guys are going to just be blown away. Now, as I said, I'm going to answer a couple of questions for you guys. Okay. I know I've gone over in time over here. Please forgive me. It's worthwhile. We're all, again, sequestered and trapped at home. All right. On this particular page, I want to reiterate again, this is theotrade.com/risk. Our email address, okay, our phone number. But if you need to support right now, just go over here. We are here, okay? How can we help you? We'll just chat with you right now. By the way, this is Jeff Roth, okay? But that's one of mine. I have 3 of those. That one is definitely one of mine. All right. With that, okay, let me start to answer a few of the questions that have come up tonight. I think one of the easiest ways to do that, I have some generalized questions, okay? Then we're going to answer some of your questions over here. Again, as you're enrolling for this tonight, we're in the chat room and we're answering your questions, okay, kind of live in there. All right. I love it. So Thurston will get you taken care of here momentarily. Matt, I think they already got in touch with you. Fantastic. Okay. I see there's still a ton of people logged in right now onto the site. So, okay, bear with us for a second because we have so many people firing questions away. I'm going to get some generalized questions out of the way. All right. First of all, people always ask us, what do I need to get started over here? I think you need a laptop and internet connection. You can even use an iPad to trade on these days. The iPads are spectacular. At TheoTrade, we have everything you're going to need to get started from just novice to the most extreme traders. Okay, everything that you're going to need. All right. The second question that always comes up, and I've hammered away at this time and time again, this is not a membership. I don't want you to think it is. Okay. It's important to me that you guys know that. We're not going to auto renew or build. We don't do it. We don't play games. Like, listen, I spent 15 years of my life building, okay, one of the biggest brokerage firms ever out there. I come from a highly regulated world. Like, I get it. I know people don't want to get knocked around. They don't want a bunch of crap. We're not going to do that. That's why I don't like the idea of the membership myself. That's why it's $297 for 3 months. If you want to do another couple of months after that, okay, go for it. TheoTrade, we archive everything. Because I know not everybody can make it live every single day. We understand you can't watch live throughout each trading session. We archive everything. Okay. Number 4 here, we provide you access to the mobile applications. Kind of what's cool about the mobile applications, we do iOS and Android. The mobile applications, they'll have a feature in there where you can actually speed it up and play back at 1.5 times the speed or 2 times the speed. Okay. We're tech geeks and we believe that, most of you probably want that. So yeah, we put in a couple of cool features in there. Number 5, email us anytime. You're going to receive a response within 24 hours, including trade-related questions. Like, let's not hedge around the truth over here. I can't stand that. Everybody's like, I can answer anything for you except trade-related. What do you think this is about? Okay? This ain't grade school. This is trading. You ask us a trading question, I'm going to give you a definitive answer. Okay? Listen, okay? It's trading. There's risk in trading. We all realize that. Okay? Put on your big boy pants. Ask the question if you've got it. That's what we're here for. Number 6, gain access to every course TheoTrade has done in the previous 4 years. We give you access to everything. Classes, coaching sessions, live trading sessions. There's nothing that we have not done in the last 4 years that you don't have access to. Name a trading topic, name a genre of trade, we have an archive on it. Number 7 over here. All the trades we've talked about can be done in an IRA or retirement account with as little as $2,000, okay, within the account. So you don't have to have a huge account over there. I gotta stress that. Okay. Number 8, we at TheoTrade can help you get approved for options. So some people say, I don't have an options account. My broker won't let me get into options. We can help you. We can help you. We have relationships with TD Ameritrade. We have relationships with E-Trade. We have relationships, of course, with Tasty. Okay. Now, TD Ameritrade is also part of Charles Schwab. It's about to be part of Charles Schwab. If that deal goes through, who knows right now? The world is a volatile place. Nevertheless, E-Trade is about to be part of Morgan Stanley. If Morgan Stanley makes it through this, we will play wait and see. Nevertheless, we have relationships because, again, that's the business I come from. Number 9, remember, there are 30 riskless trade spots available. There's not 30 riskless trade spots available anymore because people are enrolling as we speak over here. I'm telling you guys, it's $297. It's nothing. Get results, take action. Okay. Come into the chat room tomorrow morning, first thing in the morning. I start at 6:22 a.m. Pacific time. Get in there and talk to us. Go to theotrade.com/risk. Now, I'm going to answer some generalized questions for you guys. By the way, what our members are saying over here, I love this. March 17th. Trader Vic, thanks, Don. I'm so glad I switched to Theo from another service. This is Jakester. This is today. Micros have been great. Hedged my account with a couple of them weeks ago. Held my account in place while Theta came in. Okay. Very peaceful trading amidst chaos once I went that route. Bill, 2,000 wonderful people in here. This is actually the other day we had just an absolute packed chat room. Again, I want to throw this page back up there, and then I'm going to jump in. I'm going to answer some really specific questions from you guys. I wanted to get some general questions out of the way up front, but go right now to theotrade.com/risk. Again, theotrade.com/risk. And let me answer, again, some specific questions. If you have enrollment questions, hit us online over here, okay? I love it. People asking specific trade questions over here. By the way, thank you, Tony. Tony was like, no, there's only 29 spots left. Well, Tony, okay, I think that's a good thing. And be sure to chat in tomorrow morning. With that, you know what? I like this. First question that came in. Isn't the volatility relative to the company that you're trading? Okay. What may be high for one company may not be high for another company. Okay, that's absolutely true. Volatility is relative to the company that you're trading. Nevertheless, there are certain volatility numbers that once we hit, okay, it's not relative to the company you're trading. It's everything, okay, because it starts to break down the entire options model. So for the most part, in I will say regular marketplace, yes, volatility, okay, is kind of what you make of it. Volatility is what you make of it in an individual company. In the midst of the extreme market conditions that we're in right now, volatility is a total and complete free-for-all, okay? And it's not about the individual company. It's more about the opportunity, okay? Sandy actually asked, can this be done in an IRA? I'll reiterate, everything that you've seen tonight is done in an IRA. I actually trade in my IRA on a day-to-day basis. One of the reasons I trade in my IRA day-to-day here, okay, day-to-day here at TheoTrade, I trade in the IRA. And again, the reason I like to do that is to make sure that everybody can do the exact same trades that I am doing. And I think that that's an important concept that you guys should kind of, behold. Next one. All right. I have an IRA. I may need converting into a trading account. All right. It's about 15,000. Now it's about 10,000. What's the best way to get it done? So your IRA, it'll be fine to trade in. It just depends on what brokerage firm you're in. So, Mark, just tell me, what brokerage firm. You can shoot me an email. We can get you set up. Okay. Again, I trade in my IRA, and IRAs are set up to do pretty much anything you want to be able to do in them. Okay. So, all are these intraday trades or swing trades? So Ryan was asking that, and the answer to you is we do in the chat room have some intraday trades and we have some swing trades. Okay, almost every trade though that I showed you today with the risk twist spreads, with the in-out spreads, those trades are days, sometimes weeks, even months. Those are much more hands-off kind of stuff, right? So Ryan, that's a great question over there. Okay. Another one came in and said, how to use the quant indicator. All right. So I explained that a little bit in the onset. There are full-blown classes about the quant indicator. I spent tremendous time. And by the way, I use that quant indicator every single day. Every single day you'll actually see me use the comparative quantics will be on my screen because it's imperative to use it for myself. I love it. Another question that came in, are spreads safer, okay, than directional bias? Absolutely, unequivocally, yes. If you trade in this kind of volatility and you trade options and you're not using spreads, okay, you're gonna suffer. You're gonna suffer the consequences of it. And I don't mean to sugarcoat that, and I'm not sugarcoating it, because you have to understand spreads in this marketplace to, in effect, survive this marketplace. Okay, it's an imperative. I love this. Okay, next one came in. I was a member, okay, of TheoTrade before. I quit. It's way too much information. From Frank. Frank, I actually take that as a compliment, sir. Okay, I would probably try to provide you more, okay, for less. We give you more than any other site by tenfold. The one thing you want to do over here, limit. If it's too much information to you. By the way, if it's too much information to you, I'll tell you what you do. I'll make this even easier. Just shoot me an email directly. I don't care if 500 people shoot me an email. Okay, what am I going to do? I'm sequestered with wife and 3 kids. Okay, I want to stay married, so shoot me an email. I'd rather answer the emails right now and not get in trouble downstairs. Listen, shoot me the email. Tell me what kind of trading you're interested in. Tell me what kind of capital you have. I'll actually give you definitive classes to watch. Okay, let's narrow it down for you, because I totally get it, Frank. Like, I think that's a viable thing. Like, we give you too much. Okay, I don't know. For $297, I'd still rather be overwhelmed than underwhelmed. Okay, nothing even comes close. Okay, to the education that we provide here, the quality of education we provide here at TheoTrade is first and foremost. The amount of education, okay, is bar none. Okay, it's 10 times beyond anything that you've seen. There are classes out there for $10,000. They don't even scrape the surface of what we do here at TheoTrade. Okay. By the way, Kim was saying, would you help me in getting the cumulative tick script? Yeah. By the way, it's the bottom. The cumulative tick script is literally, okay, it's at the bottom of this page. It's the bottom of this page, but if you're a member or should I say, if you're enrolled for TheoTrade, okay, we'll walk you through all of it. It's actually got a guide of how to do everything. We can even drop it, help you drop it in there for you. No problem whatsoever. So again, it's right at the bottom of this Guide to Surviving and Thriving Extreme Volatility class page. Again, click add to cards, theotrade.com/risk. By the way, I want to thank Ron H. from North Carolina, Thurston V. from Massachusetts, Tom G. from California, Anne from Arizona, Rodney B. from Canada, looks like Serge from Florida, John W. from Oregon, John F. from Texas, Gene from California, Terrence from California, a lot of California, imagine that, sequestered in our homes. It's not just California, believe me. Paul W. from North Carolina, Jerry D. from Oklahoma, Anthony from California, Kevin S. from California, Dean M. from Michigan, Greg E. from Georgia. Okay, I'm going to butcher this name. I can't even get it from California. I apologize. I cannot pronounce that one. That one's rough on me. Richard W. from Florida, Cameron R. from Tennessee, Jay Robinson from looks like Virginia, Marcy C. from Pennsylvania, Eric A. from Canada, Andy W. from Pennsylvania. By the way, for those of you that are from Canada, we can also help you. You can also help you if you're in Canada to which brokerage firm you might want to go to. Canada's a little tricky. Okay. Andy W. from Pennsylvania. By the way, we only have 3 riskless spots left. There's 3 riskless spots left right now. Chris A. from Rhode Island. Tom H. from Wisconsin. John H. from Texas. Okay. Erwin J. from Georgia. Again, there are 3 spots. There's literally 3 spots left in here. Listen, I have gone way over time tonight. Okay. I will literally, I would try to sit here and answer every single question I possibly can. Rodney, the indicator that you've got tonight is specific to Thinkorswim. It is specific to Thinkorswim because that's where some of our programming skills lie. Imagine that. I only spent 15 years of my life working on it, so that's where our programming skills happen to lie. So by all means, it is specific to that platform. We do have a couple other platforms that we can help you on, though. Believe me, we know the brokerage business over here. More importantly, want to help you navigate through some of this volatility. I want to thank everybody for joining us tonight. Listen, I start, and I want to reiterate this again, 6:22 a.m. Pacific time. That's 9:22, okay, Eastern Standard Time. That's when I go live in the chat room. I'm going to be in there first thing in the morning. Enroll right now, TheoTrade.com/risk. Again, TheoTrade.com/risk. As I said, I want to thank everybody for joining us tonight, sticking with us all this time over here. Please have a wonderful evening, okay? Try to enjoy some of the time off. I know that we're all sequestered to the home, okay? Spend time in TheoTrade. Spend time learning this stuff. It is absolutely worth your while. Have a wonderful night, everybody. Bye-bye.